So good morning. My name is Oliver Geider. I'm the Executive Director of Eurocrowd. I welcome you here to our 6th CrowdCamp, Scaling Up Partnerships. We want to showcase today the impact of match funding between government funds and crowdfunding. This has been done in the past. We've started looking at this in 2008. We showcased that this is possible. And today we have exciting speakers here that can speak from experience how it works, that can showcase some best practices. We have speakers from the policy side here. And so we are hopefully able to put this into a good session for you that will drive, I think, the development of the crowdfunding market and the development of cohesion policy in order to implement joint activities here forward. I would like to quickly go through the slides with you, or the agenda. I just very quick welcome. I don't want to take your time. We have an opening of our chair, Christine Friedrich, who is also the CEO of Investment, a German lending platform. We then have a keynote from DG Regio at the European Commission. That's Adam Abdul Wahab, who will tell us about the Commission's view on cohesion policy, the Commission's experience with this, and data that they have also on this topic. So I think that will set the stage and give us a good idea of what we can expect potentially from policymakers in the next years, and what they already know and where we may have to help them gather more information. We then have Bruno Rubino from the European Investment Bank. He's the head of iCompass. It's a project that runs there that has been involved in this topic for many years, and which also has done a number of studies. And so Bruno will give us the view of the European Investment Bank that is already playing with match funding for crowdfunding. And I think that also will be highly interesting for all of us. Then we have a Spotlight On session where my colleague and co-director Francesca Passeri will showcase findings of a report that we are launching on exactly this topic. She has all the details where it comes from. It's quite comprehensive and encompasses about 22 case studies. And after that, we will have a panel where some of these cases will be presented. And I thank Martina Lodi from ARTA, who will moderate the session and will make sure that this goes the way that we as an audience want to hear it. And we have a number of speakers there, Eleonora Cosi from the Comune di Milano. We have Audius Briskevicius, sorry, I can't really pronounce that very well, Finn B, Johan Nesme from PPL, and Megan Leonard-Kane from CEDAS. And after that, we will have a Q&A session for the panel where all the participants can ask their questions through the chat function. We have a Q&A function here online for those that are on Zoom. And after the keynotes, we will also allow Q&A through this function. And we will moderate the questions so that to make sure that we can keep this time close and tight. And then we have a closing keynote. We are very grateful from the European Parliament by Rosa D'Amato from the Greens, who will give their vision on this topic. But with no further ado, I would like my dear colleague and our chair, Christine Friedrich, to join us here. Christine, if you could switch on your video.
Good morning.
Thank you, Christine. Christine, I would like you to give an opening and maybe start the discussion, from your side, from your perspective, as being involved here and as being the chairman of ours, but also running a platform that is interested in sustainable finance. So,
thank you, Oliver, for the introduction. I don't have slides. I would just share some puzzle pieces. Do you want to keep it in the back, or do you have anything more to share? Okay, so we just leave it like this.
Yes.
Okay, perfect. So yeah, thank you for having me, and welcome everybody to our 6th CrowdCamp. I'm really excited about the topic match funding and to see later more results of the report. It is one of the milestones of ECN, as many of you have followed us and know crowdfunding quite well. There were massive insights in the last couple of years we could gather and understand better what our industry can actually potentially do to increase access to finance, to make investing more democratize investing, and to also fuel the economy of the future. And I would like to use a few minutes here to set a little bit the stage and share with you also some experience, observations and perspectives from the last 2 years, as we today, maybe most of you know, we have the General Assembly as well in the afternoon where we select a new board, and we have a really great setup of diverse people and experience in different crowdfunding forms, because one thing which is always important to us in ECN is also to see the industry as its whole, as the different components of focus and tastes, and it's a very diverse industry. It's very exciting to see what over the last 10 years different different platform providers, but also different other cooperation partners like payment providers, the communication with policymakers and all stakeholders around this field of crowdfunding, financing, alternative financing, but also technologies like blockchain, trends like sustainable finance. These are all things which have been more developed in the last couple of years. And we can see that when you see 10 years back, where some of us started, we were starting 2011 with early stage startups, that a lot of the first platforms were very early stage, because there was, from many platforms' perspectives, the biggest needs, and we couldn't do so many volumes yet. And then over time, as the industry matured more, and we had the opportunity also with the associations on European level, with Eurocrowd, but also on national level, to show the potential of crowdfunding for our economies and also societies. And over the years, more and more crowdfunding legislation came into place, which helped us as an industry to grow, to learn. And this is also something which is very important. I think what Eurocrowd's philosophy is to really drive forward multi-stakeholder understanding, building bridges of understanding, creating also new narratives, and showing that this is also an industry which is representing a new mindset, because many of us who started have been maybe seeing the way how you can do financial services in a different way. I mean, as you know, crowdfunding is a very participating financing instrument. It's very public, it is engaging, it is, you really have to make sure that everybody has also the right information. And this brings, when you look into equity and lending crowdfunding and what is happening at the moment with ECSP and other regulations, this is sometimes which takes maybe a little bit the lightness of the topic. And I think when I see the platform growth over the last 10 years, this was quite for sure challenging for many to adjust to regular changing policies, because you need to imagine most of them, especially in the early years, have been small teams, and it's a lot of investment to adjust to a policy from the product and also from the communication and legal side. So I think that was a bother of the growth potential. But now where we have ECSP, we have more understanding, we have a lot of best practices, we much better can leverage the potential and have proven, I think, I'm pretty convinced actually that in the last 10 years, we have proven that crowdfunding is here to not only stay, but also to really nourish and leverage the potential of capital in the private, also from private people. There are, as you know, trillions of euro on bank accounts, which are not used and which could be activated for the real economy. We know the data also regarding ESG and co, where they need billions over billions in order to support the projects we need in order to solve the problems of our future and current ones. And also in the Corona pandemic, we showed that platforms can be a great gateway to actually make access to capital available because of technology. I mean, this is sometimes I think one of the key learnings of the last years, where also technology is more evolving and digitalization is moving forward. Also financial literacy and how to deal with technology is for sure helping to push our growth in a couple of years. And when you see crowdfunding, where it comes from, I mean, all know the stories from the beginning. That's a different, if it was cooperatives or other forms, have been doing kind of crowdfunding as well. And maybe even the stock exchange is a kind of crowdfunding. And the difference, I think, which the platforms bring into being is that we have a different approach on presenting projects and choosing projects, really caring about the customer, about the companies, to have a good experience in order to, and this is a good thing about competition, as crowdfunding has been strong in competition with other financial instruments and had to prove itself, of course, has to create and deliver great results. And I think from the mindset in our industry, and this is why I'm so in love with crowdfunding and also active in the different working groups and with ECN, to really be around these great people who are kind of also visionary in some ways and trying to go new ways and to question the status quo. And if you see what's happening in our economies and on our world, maybe even, we see we need to change our mindset, and we have to cooperate more between each other. Knowledge has to flow quicker. We really need to have real data. It's really, I mean, in the times of fake news and political correctness and so on, it's very important to back your opinions. And that's the thing. Maybe it should be less opinion, but more sharing of experiences and perspectives, and then find on the go between the different stakeholders the best possible outcome. And the last 2 years, for sure, were a very important time for our industry, as we in the ECSP came about in last October, and now it will be in a way active in November the 10th, and we're in the ECSPR working group, for example, active, involved in understanding and interpreting the impact, but also the foundation of ECSPR and what it actually means for each platform, for the industry, but also in different member states. There are different interpretations which can harm the industry, as we can see. And this is maybe because I'm very optimistic and positive about it, and also patience after we have been patient for quite a while and see that it really is increasing, and the growth of the market is like 100% per year around. Even this is, we don't have really sufficient data in general, we have to say. I think this is one thing when I come maybe more now to ECN, what we did in the last 2 years, and a very important point, like also today, the match funding report, to show use cases, to show sufficient data, to have something people can grab on. And as many of you are here policymakers, I really acknowledge the great, especially on European level, communication and openness to understand our industry, to take us serious, and to give us the space and time to develop further. And I think we're in a great time where if we all collaborate even closer, we can create great results, and really will take away also a little bit the fear of people to interact with this instrument, because we are still in the, let's say, not even early majority, I would say, when I see the numbers of how many people have participated yet, reward-based maybe, and donation more than lending and equity. And as in the beginning mentioned already, the beauty about crowdfunding is also the different types of crowdfunding which are out there. And we have seen in the last couple of years a great innovation about trying out new things, and it will be really great. And I want to just invite everybody to participate in the different multi-stakeholder groups, and also follow ECN on social media, sign up for the newsletter if you haven't already, and to really bring the different best practices together and help policymakers also to dynamically, why it's happening, adjust legislation. Because at the moment when we see there were in certain member states the, how can I say, diplomatic, the impression that there was maybe not such a deep understanding of what crowdfunding actually is and can do, and how diverse and already progressed it is. Because sometimes we still have old myths and like bad cases, whatever. I mean, this is part of the industry as well. But when you see what lately has been done in reports and in diving deeper into a certain topic, if it's, for example, the whole impact of blockchain and DLT, which we were looking at in our working group on blockchain for alternative finance, which had in 2018, 2 years ago, that's where it started. Actually, really great kickoff. You can also read the article about it, the short summary and the video online. And this already showed that how much also creativity is in the room and openness to find solutions for the issues which maybe hold us back. And what I always appreciated on the European level, and we have been all together in a way since 2013, right? If you think about it, is this trusted relationships we were building, the openness to share best practices, to learn from each other, and to see us more as cooperators in order to make the market bigger. You can see that over the years, there have been co-investments between platforms, co-matching is a thing with public funds and others, but also between the platforms has been an intense conversation and sharing of experience, because in the end, and not so many maybe even out there. And we really acknowledge also the scientific community. I'm really happy always to see when in ECN there are also the researchers involved and help us to analyze our data. I think that's something we will stress on more in the next couple of years, as we could see in the discussions with policymakers, especially on national level, how that there's a lack of sufficient data, and also because there are so many different types of crowdfunding, it's sometimes hard for people to segment. And besides, I mean, what you can see today with the report is that we in the working groups are always trying to have certain objectives which are helping us all to have a better understanding about what is going on and what can be even more leverage the potential of crowdfunding. And what is important is the methodology. It is use cases. It is asking good questions. And this is actually what we always try to do, is especially asking questions and not only assume answers, but to look deeper and to involve people who have the experience. And maybe you already heard that the Sustainable Working Group will be kicked off after the Match Funding Group now, in order to also look deeper into this very important field. Many of you, maybe from the platforms, but also generally, everybody of us in a way is, infected by the potential of sustainability and especially sustainable finance, and has a huge positive impact on our economies and societies. And it's great to see that over the last couple of years, this topic became more and more not only important, but also more visible. And also their co-matching, as we will see today, is in this field also very, has a high potential, because it's also a very emotional field. And I don't know if he has a chance to share a link in the chat with the audience. There was lately a report published last week, or May maybe, EVPA. And also Eurocrowd was involved, was talking about the impact investing on crowdfunding, also how this both comes together and what potential crowdfunding can have for this field of finance. And maybe if somebody could share it, otherwise you will find it on also Eurocrowd website. It's really, really interesting to see what has been done so far, and also the great operations in there. Like, for example, there were a France use case from BNP Paribas with Lita as an example in an investment fund. And it is also the recording, I think, Francesca, will be somewhere online, maybe. I don't know. Maybe we can share this or have a follow-up email with the links. But yeah, this is very insightful, and we can see this is maybe something because I slowly will wrap up and maybe come to what are the next 2 years bringing, which we will kick off today in a way, review and looking forward, is that we see in different countries, different dynamics, also based on how policymaking has been done before. And I can for sure say that there are certain countries, like we all anyway know, which are maybe a bit more minded and progressive and maybe a little bit less fearful, like the UK and the Netherlands, for example, have a much higher participation on crowdfunding platforms than, for example, in countries like Germany or Hungary, let's say. And different member states have different challenges, and it's not always easy to get everybody together because there's a lot of people, but I really would invite us all in the next 2 years to engage very closely, to reach out to each other, to be straightforward and follow each other's conversation and have a bit more communication between all participants of the industry. And the stakeholder groups in ECN can be a way. I invite everybody to join us if you haven't yet. And I'm really excited to see what the report today bring. I think so far the most important things have been said. I don't need to, maybe Oliver, do you, or Francesca, do you want to join? I think Francesca, you anyway would take over from me, right?
Exactly. Thank you very much. Thank you, Christine.
I would like to congratulate you with this opportunity to the report and to everything you guys did, because I really think that's the way how Eurocrowd is working, and the philosophy and the goal is exactly what we need to really push the industry in the next years. You know, so it's very nice to see, and thank you so much for having me.
Thank you. Thank you for looking a bit at our past, summing up our history, but also looking and opening this conference with a look to the future on the activities that we will do. Before we move on to the first keynote of today, just a quick reminder for some technical housekeeping rules. As you might have noticed, all the attendees have their microphones and cameras switched off. That is to facilitate the recording and also to avoid any connection issues. But we do want to encourage interaction and participation. This is why we're here. And so you can use the Q&A section that you can find at the bottom of your screen on Zoom to pose questions throughout the event. And we will relay those during the Q&A session at the end of this conference at 12:40. A recording of this event will be made available on our YouTube channel and via a link that you will find on our website. So these were more or less the few technical things that we needed to make clear. But now I would very much like to introduce Mr. Adam Abdul Wahab, policy analyst from DG Regio. Adam, welcome, and thank you for joining us.
Thank you. It's a pleasure to be here, even if virtually.
Exactly. We hope to do some physical meetings in the near future. I leave you the floor. Thanks again.
Thank you. So, okay, I think I will start with a short overview of how structural funds work, and it's I have only 20 minutes, and it's a pretty big policy, so I will just stick to the very basics that I think is needed to understand what we're talking about, because I'm aware that many of you do not know how this policy works. So can we jump to the next slide? Okay. So I think that there are several principles and characteristics, so it's just kind of selected to understand how this functions. Basically, the structural funds or the regional policy is a program-based policy. It means that for every multi-annual financial framework for 7 years, we agree as Commission with the member states about programs that are to be implemented that contribute to certain policy objectives. Then these programs are implemented in what we call a shared management framework. It practically means that most of the implementation actions is done by the member states. The Commission retains a monitoring and certain control and management roles, but practically as the programming cycle goes is that we agree at the beginning of the 7-year period on the programs. Then we as Commission monitor these programs. If there are modifications needed, then we approve it with negotiations with the member states, and we perform a certain verification, control, and audit functions that because the Commission is still responsible for the implementation of the European budget. The programs themselves are implemented by member state institutions. That means that we do not have a separate EU level institution apart from the Commission doing its job to do audits or to do implementations. Now, there are a couple of exceptions here. So there is a little bit of the structural funds that is direct management, somewhat over 0.1% of the allocations, so really, really small. But you know, for basically the overwhelming bulk, it is based on these 7 years of programs where it is agreed within the Commission and the member state, and then the member state institutions implement this program within the agreement, and the Commission just basically monitors that how things are going, and unless they are breaching what was agreed in the OP and obviously what is in the regulations, then we take action. Otherwise, we are just monitoring. The other characteristic is the main forms of support are grants and financial instruments. There are other forms of support, and there is a little bit of a variation, but basically grants and financial instruments took up until now 99% of the form of support. And financial instruments here mean loans, guarantee, and equity investment. The interesting thing, or the important thing, is to understand here that in that framework, crowdfunding is a way to channel these supports, whether they are grants or financial instruments. So basically, it's also a channel it's a channel where public money gets to the recipients of the support. If we can move to the next slide, because that will a little bit explain what we were expecting with this study. Now, to give you the history a little bit, this is initiated by the European Parliament. The Commission also started to explore the possibilities of involving crowdfunding, but then it was an explicit European Parliament action that led to this particular study, where we basically wanted to understand if there are legal or other constraints using crowdfunding in cohesion policy. So is it possible to channel this support through a crowdfunding mechanism, and to what extent? I'm doing a spoiler. Yes, it is possible. So that is what came out. But obviously, before we start something like that, we wanted to have a clear vision of what is possible, what is feasible, and in a certain sense, what makes sense. So the report itself, it's finalized, so it's await publications. Hopefully, it will be published in the next week or in the coming weeks. The original time frame is that it should be published in July, and I trust that we will be able to publish it in early July latest. So what we wanted in this study is obviously kind of get an introduction to crowdfunding, because obviously I'm talking to now a kind of a crowdfunding crowd. Many of you, most of you know crowdfunding very well. That is not necessarily the case for either the general population or public administration all over the European Union. So we wanted to have an overview of the European crowdfunding activities, the markets. There is even what we call a market readiness assessment, where we try to assess each member state's, I wouldn't call it development, but I would rather use the word advancement or progress in terms of crowdfunding, or how much crowdfunding is existing in the financial sector of the different member states. Then obviously we wanted to have, because we're responsible for part of the European budget, so we wanted to identify the potential risks, to have some legal analysis to understand whether our regulations that drive how cohesion policy, regional policy works, whether it is compatible with crowdfunding. Do we have to prepare ourselves to do some modifications? Again, we were lucky, because the result is that within the current legal framework, it is possible. The study was identifying the next legal framework. As probably many of you are aware that with 2021, a new multi-annual financial framework started, so a new 7 years, which means that basically this study overlapped a little bit on the negotiations of the new regulations. That was both a blessing and a curse, in the sense that we were aware of the major features, but because it hadn't been finalized, we didn't know exactly what the details are going to be. And then for every legal analysis, the devil is in the details. So practically, we took into account what happened. The new regulations, the new CPRs, we expect that it will be published in the 30th of June. So we had the opportunity to have a look at that, and then I can happily say that the changes that occur in the regulations aren't significant to from the point of view of crowdfunding. So there is no legal barrier to employ crowdfunding in the legal framework that was valid until 2020, and actually is valid until 2023 because of the budgetary rules, and it will be possible in the next legal framework. Then we wanted also to kind of explore all possibility. I will talk about it a little bit later, of how it can be legally done. And also we wanted to say that, okay, you have certain models how legally you can integrate crowdfunding into cohesion policy, but do they make sense? Because some of them are administratively complicated. Probably the associated administrative costs are disproportionate to the benefits that you can have, or just disproportionate to other legal solutions. And we didn't want to give either recommendation or guidance to member states how to do that, because we also do not really know it. There is only a few existing practices. So we call them blueprints, and then we selected, and then the study developed 4 blueprints that we consider as those that make sense. They are not all those that are make sense, so others can as well. If we go to the next slide, then you will see these are the possible options that we identified, depending on the level of interaction between the managing authorities, which are the main institutions of the member states who are in charge of the program. So each program, as I said, it's a program-based policy implemented by the institutions of the member states. Each program has a designated managing authority that it has the primary responsibility of implementing that program in the member state. So how the managing authority can interact with the crowdfunding platform is an important dimension to consider. Basically, you can say that there is the minimum level where the managing authority is a kind of an outsider, a facilitator, doesn't even provide direct financing to it, but can provide non-financial support to project owners, investors, the platforms, and so on, whether it's training, capacity building. Now, it's a little bit more intensive interaction when the managing authority actually gives money, which is its main business, is giving financial support to recipients. And there, it is a characteristic of regional policy that we have a slightly different delivery structure when it comes to grants to compare when it comes to financial instruments. But the underlying logic is very similar. In each case, it's within the framework of a program, so it's under the supervision of the managing authority. You have a slightly different terminology and obviously different rules. Mainly deriving from the fact that you don't ask back grants, but you link it to certain activities. Whereas when you give financial instruments, you expect the money to be paid back, which requires a different kind of a delivery mechanism. And then finally, which we kind of, they say the highest level of interaction when the managing authority actually participates in the crowdfunding as such, in different rules. Now, we identified 11 models, and some of them have variants there. You can find them in the reports. I'm not going to go through them. But this is, let's say, the set of legal possibilities. It does not mean that that they all make sense. Actually, some of them, frankly, doesn't, because it's just too complicated, and we don't think that it's a very wise thing to go ahead, but legally possible. Now, if we go to the last slide, basically, the study identifies 4 of these blueprints that we think these are what makes sense, and then that can be used. As you can see, this doesn't cover all the 11 models, and in practice, there are 2 of them that are actually covering a variant of one of these models, and they are a various complexity and level of interaction. Basically, we wanted to give a kind of an entry-level blueprint for those managing authorities who are really cautious, that are operating in the member states where crowdfunding as such is not very much advanced. And then we wanted to kind of show the other end of the scale, more of an ambition level, where members, that requires a kind of a high level of sophistication, a high degree of high involvement from the managing authority. And then we provided two blueprints in between. This doesn't mean that these are kind of recommendations that we, the Commission or the authors of the study, say that, okay, this is what you need to do. This is just basically kind of 4 blueprints of what we think can make sense in the depending on circumstances in the member states, depending on the policy objectives of the managing authority. And as I said at the beginning, because of this shared management framework, how it looks is that it's the member states that are making the proposal for an operational program. They are drafting. They are holding the pen. So we as Commission will not be. Sorry, I see that MA starts for managing authorities. So these are the member state institutions that bear the primary responsibility for implementing the program as agreed between the member state and the Commission. So it is the member state that proposes. So as for the next step, we have a very positive opinion of what came out of this study. So we think crowdfunding has a big potential to be applied. Unfortunately, there is a few existing practices. We have case studies or more like examples in the study, and 6 more in more details. Many of them are not very much detailed, but they are there just for you to give a flavor. But the idea is that I think in the next part we are going to try to collect more practices to monitor a little bit what is going on. But what we are not able to do in this legal framework, we cannot propose to a member state to do it. We cannot bring it because it is a channel to provide support, through which to provide support. The Commission is not in a legal position to say that to a member state that you should put crowdfunding in your operational program. So if we want to go in advance, and then if I might link it to what Christine said about looking forward to the future, if we want it, it is up to the member states, and it is up to the different authorities in the member states to propose crowdfunding, even to the extent that they might appear in programs, they might not. There is the result of the legal analysis that legally they do not have to feature in the programs. So there is no reason for a member state apart from giving it a political importance, to tell us that this is something that we want. They don't need to write in crowdfunding into the program if they don't want to. They can employ crowdfunding even without crowdfunding appearing in the programs. So it's pretty much up to the member state. But what we can do and say in the Commission part is that obviously if we are going to be supportive, if member states have authorities or have organizations they want to experiment or upscale crowdfunding activities, we are going to be partners for that. And I think this concludes my my intervention. So thank you for your attention, and I'm waiting for the questions you have. Thank you.
Thank you, Adam, for, well, in the first place, for the overview about cohesion policy. I think it helps all of us to clarify the key elements that are important to know so that we understand why we're exploring this topic, and also for highlighting what the potential possibilities could be. I think that the approach that you've just mentioned of leaving the initiative to the member state is perfectly in line with what the overall framework of cohesion policy entails. And so I think it's relevant that the Commission is now slowly opening up to an opportunity, but of course, waiting for someone to take the initiative as it should be. Thank you very much. We'll have a short round of questions afterwards, but now I would like to introduce our second keynote for the day, Mr. Bruno Rubino from the European Investment Bank, head of FICOMPAS. Bruno, welcome. Thank you for joining us. I leave you the floor without further ado.
Thank you, Francesca. Thumbs up if you can hear me well. I guess yes. So good morning, everybody, and good morning from Luxembourg. I'm glad that Adam explained and covered how the structural funds and cohesion policy operates. So it will save me a bit of it will save me from getting in too much into the details of my presentation. Next slide. So I guess we are all in agreement if I say that crowdfunding platforms are gaining momentum in Europe. More and more, they represent an alternative and a reliable source of finance for SMEs and micro enterprises. Adam touched upon a bit on this. Crowdfunding platform, and they very often act as a first sounding board for innovative business and for social projects. The more the activity of crowdfunding platforms, the more we see positive collateral effect, positive impact, positive social impact, both from the social side and the labor inclusion side, particularly on vulnerable groups. And these vulnerable groups, these individuals, de facto coincide a lot with typical European structural funds final recipients. Next slide, please. So, together with DG Employment, we took the decision to have a study on the FICOMPAS, which is not the study that Adam was mentioning from the European Parliament. This is a study which took place probably a few months before the one launched and carried out for the European Parliament. And again, this study, it was focusing more on crowdfunding and financial instruments. So what aspects were considered in this study? Well, the first point was to explore the feasibility and the opportunities for, particularly for European social fund and in general co-funded financial instruments with a view to support the crowdfunding platform and projects that run crowdfunding campaigns. There was also a need to assess the current market situation related to crowdfunding There was also a need to identify current experiences. Adam said there are not very many in Europe. The idea is to see whether there were already experiences which were combining European structural funds, or better, European social fund grants with crowdfunding. And of course, there was a need to explore new ideas in support of crowdfunding platforms, potentially via ESF resources, but also covering or extended to other share management funds. Next slide, please. So, next slide. Okay, fantastic. So what came out from the study is that there were indeed quite a number of synergies between ESF financial instruments and crowdfunding. First, I would say crowdfunding usually serves types of business that face difficulties in accessing traditional finance because of, for example, limited turnover, little or no credit history, high risk profile of the business concept, and a number of reasons, a lack of credit history, very difficult to access in general finance, traditional finance. On the other hand, new entrepreneurs, social entrepreneurs, often coming from vulnerable groups, have limited access to or zero access to the traditional credit supply and they usually seek for alternative finance, including crowdfunding, particularly in the startup phase of their new business. And then, of course, the potential for additional co-financing, which is needed and could be made available thanks to ESF resources. Next slide, please. However, from the perspective of the managing authorities, which, as Adam said, are the bodies responsible for the management of this money coming from the European Commission and going through the member states, there are still some key challenges when it comes to crowdfunding. First, crowdfunding is moving towards an harmonized regulatory framework within the EU, but it is not yet there, and probably some additional efforts are still needed at that level. Second, to some extent, crowdfunding platforms, for a number of reasons, struggle to establish a sound reputation, likely because lack of unbiased information, maybe limited or little dissemination of best practice and success stories. And third, I would say that it is still challenging for quite a number of crowdfunding platforms to ensure that sufficient investment capital is matched with adequate, high-quality deal flow. Next slide, please. So, how financial instruments could contribute to crowdfunding platform. So you might understand that any cooperation between managing authorities and crowdfunding platform pooling together public and crowd resources need to have the objective to increase the availability of finance for projects which have a probability of being financed through crowdfunding. So when crowdfunded projects are aligned with the priorities of the operational programs, and this Adam touched upon on this could result in the opportunity for managing authorities to increase their impact. This slide is to show graphically how to link financial instruments to crowdfunding platform. Of course, we do not have the ambition to suggest that these are the only two options possible or available. But just for sake of simplicity, I would like to say that in the first option on the left side of the slide, the crowdfunding platform is regarded as a financial instrument, as a financial intermediary. In this case, the crowdfunding platform, which is managed by a manager, needs to be selected by the managing authority in accordance with the rules of the selection of financial intermediaries for financial instruments. There is a specific directive in this, so I'm referring to the directive for the selection of financial intermediaries. In this case, crowdfunding platform will be in charge of the selection of the project to be funded, which in turn should be consistent with the relevant priorities and criteria of the relevant operational program. The crowdfunding platform will indeed be responsible for the monitoring, the reporting, and the control of the project that benefit from, in this case, ESF financial instruments. In the second case, on the right-hand side of the slide, managing authorities can explore the possibility of targeting projects that seek finance through crowdfunding, I would say directly or an individual basis, meaning that without challenging the money, the ESF money, through the crowdfunding platform. In this case, the managing authority will appoint an entity, a body, implementing the financial instrument. This body, public or private, to be decided, again, consider a financial intermediary, is of course different from the crowdfunding platform and will have the task to coordinate with the crowdfunding platform and follow up on the project that meet the selection criteria set by the managing authority. Of course, this body implementing the financial instruments will deliver the financial product. Would that be lending? Would that be loans? Would that be equity participation? With and hopefully with better terms or terms and conditions which are more favorable than the market ones to the final recipients. This entity, of course, will be responsible for the monitoring, the reporting, control process of the financial instruments. Anyway, let me add that in both cases, in both scenarios, there is room for combining financial instruments with grants. With the contribution to the crowdfunding platform or to other entities which might provide non-financial services. So for example, the grant component could cover the coaching, the mentoring, financial education, or assistance to business plan. There is also another possibility with an investment grant, which can be used to support a project by combining a grant component with the financial product disbursed to recipients. So this solution could help in meeting the onboarding and fundraising efforts or fundraising phases of the bringers of the promoters of the project. And finally, again, this was not mentioned, but is in light of the novelty that will be introduced by the, for the moment, proposed CPR for the next or for the coming programming period. Grants can also be used as a capital rebate, whereby the managing authority could, for instance, forego the repayment of a portion of the loan and transform it into a grant, subject, of course, to pre-agreed conditions. Next slide, please. Yeah, thank you. So, potential borrowers increasingly looking at the opportunities offered by crowdfunding, but the sector still struggle to ensure liquidity, the liquidity that is needed in order to increase the lending capacity. So as a potential solution, so to be practical, we came up with an option, with a solution, with a suggestion coming from or inspired from the off-the-shelf financial instruments, which are, I would say, blueprint financial instruments proposed by the European Commission. And this one is about a risk-sharing loan product. In this model, the financial instruments will take the form of a loan facility to be set up by a financial intermediary, Of course, this financial intermediary needs to be authorized by law to operate in this respect. With the ESF contribution, you see the first blue box from the operational program, which need to be matched with a contribution from the financial intermediary. And so is the gray area. And this gray area could include investors of the crowdfunding platform. These combined resources, with these combined resources, the financial intermediary shall build a portfolio of crowdfunding projects, of course, in line with the eligibility criteria set by the managing authority in accordance with the operational program. Key advantage of this, of course, availability of more money by matching public resources with private one. And of course, an element of de-risk of the portfolio of crowdfunding. So the idea is to share the risk of a portfolio of crowdfunded projects. Next slide, please. Indeed, so far, grants represent one of the most common mechanisms used by managing authorities to support crowdfunding, particularly in the framework of non-financial crowdfunding platforms. The essence of my message today is that financial instruments can play an important role in support crowdfunding, especially lending and equity crowdfunding platforms. In this respect, we said that there are not many examples in the market of this. Nevertheless, the study has spotted 3 cases of design and deployment of innovative financial instruments that join forces with crowdfunding platform, aiming at enhancing territorial and social development. I will just mention them without really entering into the details of their mechanism. The first one is a crowdfunding loan Avviete in Lithuania in partnership with or between Invega and FinB. I suspect that one of the panelists in the next session will speak about this experience, so I'll stop here. Then in Germany, Microcrowd, where Investition Bank Berlin is providing microloans as a follow-up for rewards campaigns. And in Italy, Nova Venture in the Lazio region, where Lazio Innova, which is the regional promotional institution, financial promotional institution, provide minority stakes for equity crowdfunding projects. All these 3 cases are presented, illustrated in the FICOMPA study. And of course, if interested, I will encourage you to have a closer look at them. To the next slide. So to lead to my conclusion, I would like to say that additional resources, leverage, and portfolio and crowdfunding project portfolio de-risking could be potentially be achieved with partnership between crowdfunding platform and managing authorities using share management, in this case, ESF resources, for the benefit of ESF fund recipients. Combining financial instruments with grants can be crucial for the success of this partnership. The new CPR, and Adam mentioned this, and I would add the European Crowdfunding Service Provider Regulation for Business, recently adopted, are preparing the ground for an increased number of partnerships between crowdfunding platform and financial instruments. So synergies are possible, I would say are evident, but there is still need to work on this partnership. Maybe getting a bit more of thinking, getting technical assistance and support for pioneering ideas on how to set up financial instruments, which needs, of course, knowledge or sufficient knowledge, resources, and of course, time. Next slide, please. on my before last slide, I'm glad to see that crowdfunding has been recognized as crucial in supporting socially oriented projects by both the European Commission and by the European Investment Bank. So Commissioner Nicola Smith, in charge of jobs and social rights, and the EIB Vice President Liliana Pavlova are very supportive, are convinced that crowdfunding could lead to the creation of a positive social impact. Next slide, please. Yes, finally, allow me 10 seconds of awareness raising on where to find more information about what I presented. I'm referring to the study in the picture, which is available on the FICOMPAS website. I would encourage not only managing authorities, representatives, but also all interested parties to have a look at this document. From my side, I think that's it. Thank you, and happy to take some questions.
Thank you, Bruno. Thank you for your presentation. I'd like to call back on stage Adam and take advantage of both of your presences here to kind of address two topics, because you both have discussed what the present situation was and what has been done, you know, in the mapping phase of past experiences. But in order to wrap up this first part of the conference, I'd like to look together with you to what's in store for the future. So I would start with Adam, and I would, you know, recall the fact that you mentioned what has led to the basically publication, or to the exploration, to the setup, the design of the study that will come out. And so my question would be, what is in perspective going to happen once you have kind of figured out, or at least explored, how the, for example, legal obstacles could be addressed? What will come next?
That's a good question, because right now we are very much busy with negotiating the programs for the next period, and as I said, that is for us the priority for the coming year, maybe 1.5 years. As probably some of you are aware, the MFF was approved quite late by the member states, which created a delay in every legislative act that comes from basically that related to how the money is going to be spent. So normally this kind of a negotiation should have taken place a year ago. And as I said, that we are not in the position to actually tell the member state to use crowdfunding. Nevertheless, we will remain supportive. And then, of course, we as Commission have basically what I see right now is two other avenues where we can go forward apart from the negotiations. One is practically getting knowledge. We need to go out. We need to examine the existing practices. We need to rely on expertise, on networks, on the EIB in that, and basically understand how these work. The second is doing the really boring nitty-gritty details of what public administrations do. We need to come up with you know, all kinds of measures to mitigate risks, work out an audit practice when it comes to that, because you know, we didn't have many practices where this is solved. There were not many audits, so our auditors are not very much aware how it works. To be more precise, some of them are very much aware because they have a personal interest in crowdfunding. I hope that I cannot say that none of them are aware that the crowdfunding exists, but it might happen that there are some who doesn't even know what crowdfunding is. So we need to basically come up with this kind of a practical solutions that in an administration that you know, once let's say this big ship that we call a regional policy moves towards crowdfunding, then we know that practically what it means, and that includes everyone on board. which frankly is a lot bigger task than it seems right now. But I think that this will keep us busy for the next 2 years for sure.
Thank you. And actually picking up on what Adamis last mentioned, Bruno, I turn to you. We hope that more and more managing authorities are actually aware of the availability of this type of additional funding tool. And so I also recall something that you've mentioned throughout your presentation about the fact that there are indeed managing authorities that are showing an interest on how to use or how to combine crowdfunding mechanisms under shared management with cohesion policy funds. So do you have any more information about that?
Yes, well, of course, through FICOMPASS, we are doing our best to, among other, push crowdfunding and financial instruments and raise awareness about this. And that was the scope of the study. When talking about, well, among others, that was the scope of the study. Talking about the interest, talking about the appetite of the managing authorities. At the very moment, we are conducting a kind of country report analysis on 6 countries, for example, Spain, France, Greece, Finland, Croatia, and Romania. And within these studies, we are presenting, of course, the possibilities and analyzing the situation when it comes to financial instruments, mainly finance or co-finance with ESF money. But within the analysis and within the meetings and the interviews that we had, we also interact with managing authorities. And I would say that all the managing authorities of these countries have shown interest into crowdfunding. That was certainly not the case in the previous programming period. So this is, I would say, I would consider this as a positive. And the more we speak, the more we raise awareness, the more probably there will be an interest and will help to push to go to the next extra mile, which is needed to undertake and support crowdfunding platforms.
Absolutely, and we will, of course, try to support this interest and in the best way that we can. Adam, Bruno, thank you very much again for your availability. You're very welcome to stay until the end of the event. But we would like to now move on to the next Spotlight On session. So
thank you.
Thanks.
Thank you.
Thank you. Bye-bye.
So the idea of this next session is basically to introduce what Christine was already mentioning in her introduction, which is the latest report that we will publish on the topic of how to combine crowdfunding with public funds in general, but also more specifically with cohesion policy resources. So my name is, of course, Francesca Passeri, and I have been coordinating a working group within Eurocrowd that has worked on the topic since a number of years. So if we go to the next slide, please, you will see that we have established this multi-stakeholder group already in 2017. So when we when we think of a multi-stakeholder group within our organization, we think of crowdfunding operators cooperating with other types of stakeholders. In this case, we decided to involve directly public authorities that had already some kind of expertise in the field of combination with their own resources and crowdfunding platforms. The idea of the working group was to just put together this two entities or these two target groups and potentially try to drive them towards something that could be developed jointly. I don't think that you are seeing the slides. Okay, now it should be back. At least I see them now. So the idea was to explore how match funding mechanisms have evolved in combination with public resources and, as I said, ESIF resources. But then we also try to find ways to mainstream and standardize the type of cooperation that could arise between crowdfunding platforms and public authorities. There is a focus on mainstreaming and standardizing processes and procedures, because as we have seen also from Adam's presentation, 11 types or 11 models of schemes that could be set up might be a bit too much. Flexibility is good in most cases, but sometimes it can be confusing. So this is what we aimed at when deciding or aiming at mainstreaming and standardizing the cooperation ways. And of course, we also tried to encourage a joint effort towards innovative funding schemes. So how to support, on one hand, crowdfunding platforms, and on the other hand, public authorities in designing and delivering, implementing in their territories new financial schemes. So in the next slide, I will show you a bit what was the history of this working group, which already was established in 2017 and has been working together and growing throughout that time. The first milestone that we achieved was in June 2018. So 6 months after the formalization of the working group, we have run an event in Bologna in cooperation with Arter, whom I thank again because this year is also a partner of the CrowdCamp, where we have published the first report on the topic. The report was called Triggering Participation. The idea was to identify whether crowdfunding was actually a feasible mechanism that could be combined to public resources. And in 2018, we already had found 6 best practices stating clearly through their results that this was possible. So with those data, with that evidence on our hand, we then approached the European Parliament, where we had seen that there was a growing interest toward the topic. And we were, of course, very happy to provide our support for the work that the REGI committee had put down to push forward a pilot project, which is what, of course, Adam was mentioning, has led to then the full study. So it's a second milestone. We're very happy that it went through, and we look forward to the publication. After that, we have been very happy to also work on the topic in a very specific way on ESF, supporting colleagues from the Fee Compass initiative. And after gathering these 3 main milestones, we decided that it was already time to measure how this landscape had changed, if it had changed. So in November 2020, 2 years after or 3 years after the setup of the crowdfunding for European and structural funds working group, we have started preparations that led us to today. So to the publication of the Scaling Up Partnerships report, which will be made available next week. So this is just to give you an overview of what has led us to today, and the little building blocks that we have put together with other relevant partners, of course, in the past 3 years. So if we move to the next slide, I'll just give you an overview of where the report or which countries are covered by this year's report. We have 8 countries in total, 7 EU member states and the UK. And we have managed to involve 20 public authorities at different levels. So we have municipalities, regional authorities, development agencies, but also national public authorities, and 11 crowdfunding platforms. The interesting insight is that we have, of course, had to operate a selection, but there are many more initiatives that have actually been mapped in those countries that are not included in the report, and they're equally interesting, but we had to operate a selection according to the criteria that you will see in a minute have guided our research questions. In the next slide, just to give you a brief overview about what the report aims at and what the structure is. So the report has been designed since the very beginning as an informative piece, an easy to read study on which possibilities were currently available to public authorities so that they could use crowdfunding in its different models and forms as a combined source of finance to include in their funding mix. A second objective of the report was to, of course, provide an overview of the stakeholders that are already engaged. And this is for two main reasons. The first one is to, of course, try to foster trust. So to display who are those counterparts, those stakeholders that could be approached in case there is a need of clarification. And on the other hand, from peers, I take it from the peers' perspective, from a public authorities' perspective mainly, also reaching out to those that have already had an experience in this sense to try and clarify some doubts, try to square the circle a bit. The third objective was, of course, to provide a summary of sound evidence of which were the outcomes, the procedures, and this is very important. We had a strong focus on the procedures this time, but also the obstacles that have hindered or partially hindered the match funding initiatives that we have mapped. And then the ultimate aim was to indeed provide guidelines that would support decision makers at all levels, so national, European, national, regional, and local, in replicating best practices, but also in establishing and creating, designing new mechanisms. So these are the 4 key objectives of the report. And then in terms of structure, we try to kind of connect to each objective one specific section of the study. So we started with a presentation of the key mechanisms that relate to crowdfunding. And then we moved on to the introduction of how platforms operate in their different models, but also within the same model. And then we moved on into the core, the first core section of the study, which is the overview of case studies. And each case study is structured according to the following points. So we provide a general overview of the platform and the partnership. We then move on to the case study description, which is more a focus on what impact has been made, what results have been achieved, how much resources have been contributed by the public authority, and how much has been raised by crowdfunding. And then we move on to the third section, which is, as I was mentioning, focusing on procedures, setup, design, but also hints on, for example, stated aid rules that apply, or reporting and monitoring and reporting procedures. So, and then in the end, each case study closes with a look to the future, a look to the past. What has not worked? What have we learned? And what should be done next? Or what would be good to do in the future? And then the fourth objective, so the guidelines to support decision makers, have been translated into one match funding blueprint. So the match funding blueprint, we will see in a minute, but the idea is that it provides some concrete, practical guidance on how a public authority should first approach the instrument through different steps. So in the next slide, you will see that there is, the first thing that we aimed at doing in this report is trace or assess the change in trend or in volumes that has happened since 2018 when we published the first edition. So if we look at the triggering participation report, that is the 2018 edition, we had 6 case studies from 5 EU countries. If we look at the current edition, I'm very happy to say that we have 22 case studies that have been selected because we had received 26 from 8 countries. Even if the number of countries is not significantly higher, the relevant information, the key takeaway here is that we have an average of 2 or 3 case studies per country. And each case study has been selected so that it would show one element that differed from any other case study. So you have different case studies in different, for example, forms of finance or level of government of the public authority that is involved in the partnership per country. And this is, of course, a support to those public authorities that haven't approached the topic yet, so they can have more reference points. The second difference refers to the form of finance that were mapped in the first report. We only saw initially a combination between subsidies, so grants, with non-financial crowdfunding models, donation and reward. This time around, we have actually been able to map all crowdfunding models and to see that each of them has been partnering somehow with a public authority. And furthermore, per crowdfunding model, we had different forms of finance that were put into play. For example, we have lending crowdfunding that has been used in two different partnerships, one involving a follow-on investment and a second one involving a guarantee scheme to cover the risk. So this is a second insight that we want to provide. When we look at the 2018 report, also in terms of where the money came from, we saw that the 100% of the cases, so all the cases had the use of own resources from public authorities. In this edition, we have managed to map partnerships in which own resources have been used, but also partnerships in which structural funds have been used, so cohesion policy funds have been used, with preponderance of funds coming from, of course, ERDF and ESF. Also, in terms of which role public authorities play, we have seen that there are 4 main roles in 2018, and a positive trend that we also witnessed in this edition is that there are now 5 roles. So public authorities are not only increasing the commitment in terms of, economic allocation to these initiatives, but they're also changing the way and expanding the ways that they want to interact with platforms. And then the last relevant element of difference is that in 2018, we mapped case studies from 2014 to 2017. In this edition of the report, we managed to keep all our case studies within a recent time frame, which ranges from 2019 to 2021. So that is because we know that regulations change. And so we want to be able to provide the most up-to-date information that we can to those that want to approach the topic. If we move to the next slide, I just briefly introduce the 22 best practices. We, of course, why have we selected this 22? We have selected them in the first instance according to the differences that they could present. So we had different levels of government, of the public authorities involved, different countries, different forms of finance that are being used, different sectors of focus, so in which policy area is the initiative going to finance project, and also different nature of beneficiaries. In addition to this, there is also one specific case in which we have looked at how the platform was selected. And so we have included 2 cases that are very similar, but that have that one difference. There is no one best practice that is like the next one. What we have seen in terms of aggregate insight from this best practices is that there is a well-balanced mix of form of finance. We have 8 partnerships on grants that focus on grants and non-financial crowdfunding models. This we also built on what we had in the past report. But then we have 9 partnerships that combine lending crowdfunding with loans or guarantee schemes, and 9 partnerships with combined equity crowdfunding platforms and the public authority at some extent as a co-investor. In terms of sectors of focus, we have seen that mainly the core of the case studies focus on, of course, territorial and urban development, but they also expand to the general promotion of innovation and entrepreneurship, micro-entrepreneurship. We have seen a strong focus on social innovation and culture. This is no surprise. We have seen it already with the Fee Compass study, but it's a confirmation. And then we have a very, very broad focus that supports just access to finance for SMEs and startups that just move on the territory. So it's economic development in line with cohesion policy overview. The next slide, please. We have seen, as I told you, we have here 5 different roles for public authorities. Those of you that are familiar with the 2018 report will remember the 4 gray roles. So the sponsor, which is when public authority runs its own campaign for a specific project on an existing platform. The manager role, which is when a subnational government creates its own and manages its own crowdfunding platform. And then we have the curator role, where the local authority selects a list of projects that are in line with the policy priorities, but that have already concluded a crowdfunding campaign. So it's an ex post kind of follow-on investment or grant. And then we have the facilitator, where the public authority allocates resources to specific policy areas to all those projects that will gather or collect a predetermined percentage of budget through a crowdfunding campaign. So it's an ex ante allocation. We have here a 5th role, which is what I was mentioning before, which is the enabler role, which is when the public authority provides support services to encourage the use of crowdfunding among the citizens or among stakeholders, economic stakeholders. So in this case, we don't see a direct match funding, no resources combined with a crowdfunding platform, but this is still relevant because it's raising awareness, it's promoting the use of the instrument. It can translate into technical assistance, as Bruno was mentioning, or promotional events. So this is a strong 5th role that has emerged in this report. In the next slide, there is, I just want to give you a short introduction or presentation of what you will find in section 4 of the study about the blueprint. As I was telling you, this is something that we have developed and we have tried to identify the key steps that public authorities should keep in mind when they're thinking of approaching crowdfunding and they're trying to understand how to include crowdfunding within the already existing funding options. So here we have, of course, combined elements that are standard to all tenders or procedures that aim at combining private resources with public resources. But then you will see that there are very specific elements that relate to crowdfunding as an instrument. And those are fundamental. Those are the things that have been mentioned more often as hindering factors. So, and this is why we have included them here, and they also lead back to the content that we have included in the previous sections of the report. So the idea is that we start from the top left corner with the identification, of course, of a policy priority and a sector of interest in which the match funding initiative should be deployed. And then the second step is to identify how much budget should that initiative receive. And here, one of the things you will find in the report is that the budget that is allocated is not only or shouldn't only be the budget allocated to the actual match funding, so that will go out to the final beneficiaries, but also an estimate of the budget that will be required to carry out properly all the related activities that are needed in a match funding initiative. Then we move to the crowdfunding specific steps. And of course, we here need, as a third thing, we need to identify how the public authority wants to interact in the scheme. So which role does it want to play? And then what is the most suitable match funding schemes? Because we know that money can be allocated or resources can be combined not only through different models or through different forms of finance, but also at different times. And that has an impact on the outcome of the initiative. So after we do this, we move on to the compliance with the regulatory framework, all the regulatory frameworks that are actually applicable to this initiative. Because if we think of ESIF resources, then we have European law, applicable law at the national level, and then we also have crowdfunding regulations. So this is core, you see it, it's in the center of the blueprint. It is actually a central topic. After we have identified how the regulation could work, we should move and identify how or which crowdfunding model could be more suitable. And then you have more interesting things that refer, for example, to how to select the partner platform, or how to define the core features of the call, or even how to follow up throughout the initiative. But all of this you find in section 4. If we move to the next slide, to the main findings, just to slowly go to a conclusion, I see that here we have, of course, tried to summarize 130 pages of report in just a few bullet points. So I'm sure that you will find more interesting things, but I just wanted to point out 5 points that I think are most relevant. The first one refers to the increase in number of partnerships that we have mapped between public authorities and crowdfunding since 2018. So that tells us one main thing, that the pilot experiences in 2018 have proven to be successful and have been extended, because we have this continuity also in this report, but also that they have been inspiring for other public authorities and they've been replicated elsewhere. A second key point is that the increase in number of partnerships tells us that there is also an increase in trust, both from the crowd, so from those that contribute, or even from beneficiaries, and from the public authorities' perspective. And how is this trust kind of demonstrated? It's a feeling of familiarity that has pushed public authorities to explore more models, more crowdfunding models, moving also into the financial space. And the fact that these new initiatives have brought successful results or positive impact, it shows that the crowd is willing to engage with crowdfunding, that companies or beneficiaries are willing to use the instrument. And so we see that this is also a positive trend. The third point, it's central. It relates to the European crowdfunding service provider regulation that will actually come into full force as of November. And this is a regulation that will harmonize all crowdfunding operations across member states, and it will definitely provide an easier way towards mainstreaming and standardization of how to interact with crowdfunding platforms. So we likely expect that ECSP will facilitate the emergence of new partnerships, and it will facilitate also the replication of existing ones, as the ones that will be already developed under ECSP will be much more easier to replicate in other member states, at least from the crowdfunding perspective. Then a national regulation will have to be explored there. Next slide, please. We know that out of the 22 collected best practices, 6 have used as-if resources in combination with crowdfunding. And the interesting point is that they have been used both as grants and as financial instruments, financial products. And a further interesting insight is that these resources have been drawn from operational plans at national level, at regional level, but also at metropolitan level. And we will hear more about this in the panel discussion, so I don't dwell too long on this. For the future, we hope that there is continuity with the previous programming period, although there was maybe not much interest, as Bruno said, but there was room to develop synergies. And we hope that this continues also for the future cohesion policy. And we see that the significance of crowdfunding for all 5 policy objectives that will be likely in the next cohesion policy, it remains high. I want to thank the contributors. Next slide. Okay. I want to thank the contributors to this study. I am closing my section now. A big thank you to those that you see on the left hand side of the slide, which are all the public authorities that have been willing to support us and contribute and follow up with our work. But also on the right hand side of the slide, all the platforms that are within our network and that have basically pioneered. These 2 groups have pioneered this topic, and I really want to thank them, because if we're here today, it's because they have explored and because they have had the courage. And so I hope that we can continue to deliver good results as we have done so far. As a concluding remark, in the next slide, this is the report, Scaling Up Partnerships. It will soon be published on our website that you find here, eurocrowd.org, but you will also receive it as a follow-up to this conference. So I think that my time is up. I thank you very much for your attention. I think that if there's any questions, we will have time to address those during the Q&A after the panel, but I cannot wait to leave the floor to the panel discussion. So I would like to call on stage Martina Lodi from Arter, that will act as the moderator for the session, as well as the panelists that will tell us all about the practicalities of the case study. So Eleonora Cozzi from Comune di Milano, Audrey Skrivskevicius from FINBI, Johan Nesme from PPL, and Megan Leonard Kane from Cedars. Welcome, everyone.
Thanks, Francesca.
Hello.
Thank you, Francesca.
Thanks, Francesca.
Okay. Just waiting for Eleonora and Johan.
I'm here.
If you can turn
I
on
can,
your webcam, please.
I'm trying, but it says I'm not allowed.
Yes, the same. I have the same problem.
Okay, so I ask Eurocrowd support to help you in turning on your webcam in your video. So maybe I can start like introducing myself while we are waiting for your video. So thank you, Eurocrowd and Francesca and Oliver for inviting me to moderate this panel. It's a pleasure to be here today. I work for Arter, the innovation agency of Emilia-Romagna region, and I've been managing since 2015 Kicker. It is a guidance service for crowdfunding dedicated to startups, to SMEs, to research labs, but also to local authorities. So we're engaged in much funding studies and activities of Eurocrowd since the beginning. This panel's objective is to go in details about 4 of the 22 case studies collected by the report presented today by Francesca Passeri, to better understand from the direct protagonists who have run those experiences how the funding schemes they have started work. So how the relationship between platform and public authority has been set up, and what suggestions they want to make to policymakers, but also platforms to scale up partnerships. So what the future outlook is with the respect to the financial schemes they have adopted. So the interesting aspect of Eurocrowd's research and of the guests we have here today is the fact that they represent very different experiences that allow to have a very wide overview of the possibility of virtuous interactions among public authorities, platforms, and other stakeholders in the combination of public funds, both own resources and structural investment funds, and crowdfunding in its variants of reward, equity, and lending. So let's start with the first roundtable. I will start from Eleonora Cozzi, and now I can see you.
Yes. Thank you, Martina.
It's a pleasure to have you here with us as a municipality of Milan, which today has a strong experience in crowdfunding. So the first time your administration approached this instrument was in 2016 as a pioneer in Italy, as a public authority assuming the role of facilitator. If we think about the structure that Francesca showed us, sorry. So that is providing co-financing, technical assistance, and support for the development of several crowdfunding campaigns in specific thematic areas. So after this first successful experience, you did it again So
Yes.
this time
Last year.
Exactly. So this time you raise the public leverage. So both in terms of co-funding percentage and total budget availability. So I guess it will be very interesting for us to know more about how this match funding model works and what has changed since the first experience and how you manage procedures with public funds. So a lot of questions, the floor is yours.
Yes, thank you, Martina, for the introduction and the possibility to share our experience within this panel. First, let me say some few words on the distinctive approach of our civic crowdfunding. Our crowdfunding is not an isolated or experimental initiative, but it is a part of a broader and clear strategy that the Department of Urban Economy and Employment department has carried out over the last year in order to combine together innovation and inclusion as a way to tackle the polarization of inequalities that characterize large cities with advanced capitalist economies such as Milan. And this strategy is characterized, is based on the activation of new services and solutions for the suburbs, for the peripheral areas in the cities where economic inequalities are concentrated and where social fragility grows. Crowdfunding has been considered a powerful tool for realizing this strategy, and our crowdfunding is a civic one, not because we asked the municipality help citizens to donate to support a public interest project decided by the municipality itself, decided by the public authority, but it is a civic one because first we ask local communities to express high social impact projects, and then we ask citizens through crowd donations to decide which ones deserve public contribution according to a match funding logic. As you said, the municipality of Milan has been the first Italian local authority to launch a civic crowdfunding in 2016. In that occasion, over 300,000 euros of donation were collected, to which other 300,000 of public contribution, municipal grants, so grant funded with municipal budget were added, which made it possible to finance over 50 high impact projects in the city. Consider the success of this experience, we decided to including civic crowdfunding within the programming strategy for the use of European Social Fund under the National Operational Program Metropolitan Cities under the 9 thematic objectives: promoting social inclusion, combating poverty and any discrimination. And we relaunched this initiative last year in 2020 as a part of the city's post-COVID adaptation strategy. Both the experience, the previous experience and the current one share a similar implementation model. The first preliminary step of this implementation model is the selection by the municipality of specialized private partners for the provision of the platform provider for the crowdfunding platform. In the current initiative, two major players of Italian crowdfunding industry, namely Produzioni dal Basso and Ginger Crowdfunding, were selected in the framework of a collaboration agreement with the municipality of Milan, funded with money of our budget, our own budget. Produzioni dal Basso provided its generalist and donation and reward-based platform, and Ginger Crowdfunding provided training, advisory, and support services. The second step is the publication of a call for proposal for the selection of project. This call for proposal was launched, was addressed mainly to third sector organizations as required by the type of ESF beneficiaries foreseen by the National Operational Program Metropolitan Cities. The call for proposal was published between May and July 2020, just after the most severe phase of the COVID pandemic. So we decided not to put any thematic restrictions, looking for a project useful for the economic, social, and cultural restart after the crisis. The response from the city was enthusiastic. We received more than 60 applications and 20 projects were selected, covering a broad spectrum of themes, such as community building services, urban, social agriculture, childcare and family services, education, art and culture for social integration, circular economy, and so on, highlighting cities' resilient, a great cities' resilient effort. Then the third step is the publication of the project on the online platform, where citizens have the possibility through their cash donation to decide project deserving public grant, according to a match funding scheme and according to a all or nothing scheme logic. What does it mean? Each project had its own budget, a total cost up to 100,000 euros, and a target collection was fixed at 40% of this total budget. Only project that reach this target, this collection target on the platform, earn the right to obtain both the crowd donations and the additional funds from the municipality for the financing of the remaining 60% of their total cost, with an ESF, European Social Fund grant, up to 60,000 euros covered by the European Social Fund. In order to reduce the risk of cannibalization of projects on the online platform, we grouped projects in a slot of 6 or 7 projects each to be progressively published on the platform, where they had 60 days to run the crowdfunding campaign and collect the money. All the 19 projects selected succeed in collecting, in reaching the target, the collection target, and so were granted. More than 4,000 individual donations allowed to collect about 320,000 euros that have been more than double thanks to municipal ESF funds. So we activated 420,000 euros of ESF grants for an overall investment of more than 700,000 euros in the city. That's more or less how our experience has worked.
Thank you very much, Eleonora. It was very interesting. So I shared in the chat your the address, the link for the projects. But if you want to add something with using the chat, you can feel free.
Yes, thank you.
Okay, thank you. So let's switch from reward to lending, and from the public authority perspective to the platform ones. So Odžius Griškevičius, I'm not sure the pronunciation is right. So he's the co-founder.
Yes,
okay, thank you. Well, is the co-founder of FinB for Business, a lending crowdfunding platform from Lithuania that offers financing solution for SMEs. He's here today to tell us more about the experience of FinB working with Invega, the Lithuanian National Promotion Institution, to set up crowdfunding loans EVT, already mentioned by Bruno Robino before. So the first loan instrument in Lithuania, where the state, together with the investors, directly funds the business needs through an alternative financing platform. So here, the budget set aside by Invega was 4.6 million euros of reflows from the ESI funds, recently increased up to 10 million euros through the anti-COVID measures. So Odžius, can you please tell us more about how this financial scheme works and how it was set up? Thank you.
Thank you, Martina. So shortly, FinB is a crowdfunding platform. It's a four years old company, and we have over 20,000 investors investing into loans we originate, as well as around 2,500 SMEs that we call our customers. We issue loans that are really small ones, like our average size is 10,000 euros. So we tap into the segment that is really neglected by all financial intermediaries. No banks wants to work with these small clients, family businesses, small shops. But we can do that by employing the data that they have. We basically use the bank account information to analyze the business prospects and how they evolve. So we lend them in a small portion so that we can keep up with their phase of development, and if business is growing further, so we can add on additional loans. As we tapped into the segment that is basically neglected by everyone, we needed support, someone to fund these loans. As crowdfunding works only when you have a crowd behind you. In a startup, it's difficult to get the crowd at the beginning. So Invega was a true partner of ours, the public institution that supports business development and financial instruments in our country. So they developed basically a product for any crowdfunding platform that passes the criteria of the crowdfunding platform. So you need to be regulated by the central bank. You need to have the applicable scoring model. And if you prove that you are capable of originating good quality loans, then you can sign up with this instrument. And basically it works very simply afterwards. So we originate loans that we think credit worthy, and then Invega invests up to 40% into each loan we originate. And this certainty about available capital allowed us to decrease the interest for our borrowers, because when the crowd is not there yet and the trust is low, so you need to offer something for an investor, and usually you have to offer pretty high interest rates. And with the capital available from Invega side, we managed to reduce the interest rates by 30%. Invega was a real multiplier of our business, and I see that this crowdfunding trend it creates basically three main things for any policymaker. So it pushes the digitalization, because everything is done online, and all the contracts, all the signatures, everything is paperless. So digitalization is at its core. And then it's scalable, because you create a system that works well with thousands of customers. So it's very easy to scale if you have resources available. And as it showed in our case, that it also gives a flexibility for policymakers. Once you have the infrastructure developed by the crowdfunding, you can easily utilize your different policy needs. So let's say you want to increase loan supply in a particular region, or you want to tap into segments that are neglected still by some of the financial intermediaries. So you just give the direction for the crowdfunding platform, and they can, together with other investors, employ your resources. So the effect, as we have with Invega, is around 40-60. So Invega is 40, and the remaining investors are giving 60% of the capital. If you were working with the bank, so you need to convince the bank, and probably this is a more slower machine to push. While with the crowdfunding platforms, it's very simple. You can have many different specialized crowdfunding platforms, and you can select the one that suits you best. As an example of this infrastructure availability, it could be used that during the COVID pandemic, we were also selected by the government to distribute aid capital for the affected SMEs. And we, being a digital-only solution, we managed to distribute more loans than all other banks combined. So even the smallest platform, once it's up and running on fully digital solutions, it can really give scale when necessary. And third thing that is also is created by the crowdfunding is this financial literacy. Financial literacy is one of the main concerns in my country, especially. And when we talk about loan, it's something that is very easy to explain. So people are trying to probably the first investment is with the loan. It's easy to explain this. This has been something we've been doing for thousands of years. And once they see that these numbers on the screen turns into real cash in their accounts, so that makes them interested more and more, and then they try to understand how other financial instruments work as well. But as we saw that, from our investors, that they start even educate their kids on the crowdfunding platform how to save and how to invest money for the future. Yeah, so if you have any questions.
Okay, maybe during the second round, I will have another question for you. It is very interesting what you were saying to us, because I guess it is very important to start with this financial literacy and the education on using these financial tools and schemes. And it's not so easy. For example, here in Italy, and we are. I know, and Francesca Passeri knows very well that we were trying to disseminate this culture of crowdfunding since a long time, but it's not still fully appreciated. But with some examples like Comune of Milan and other institutions, we can do better. Okay, so I will go back to Reward with Johan Nasme, and we'll face the case study of Boa Boa, the Reward crowdfunding platform dedicated to civic-oriented projects by startups in Lisbon. So the platform was set up by Orange Bird, the company born in 2011, which has implemented People, the first reward-based crowdfunding platform in Portugal. So here we have Johan, the co-founder of Orange Bird, and the study you are going to tell us about is not a real successful one, as I understood. So Boa Boa was launched in May 2016 and remained active until the end of 2018. So it raised only, let me say, 35,000 euros, helping 15 projects in 2.5 years. So not a very impressive result, but the premises at the beginning were encouraging because of the consortium formed by recognized institution in the country, which supported the municipality in the initiative. So can you tell us more about these experiences and how it was set up and what went wrong? Thank you, Johan.
Sure, thank you for inviting me and having the opportunity to share this experience. So as you were saying, yes, we were approached by the local municipality to build a new crowdfunding platform. And it was backed by several partners, one foundation, one bank, a law firm that allowed, allowed the funding of this project. So we developed a brand new crowdfunding platform, and the objective was to be localized in Lisbon. So it was very geographically oriented, but the objective in the middle term and the long term was to be not only reward based or donation based, but also lending or equity. So promote the startup scene in Lisbon, which has been growing for the last 5 years, let's say. And so, to support the incubators network in the city, to promote probably green energy as well. So one of the purposes was to enable to invest in solar energy, on rooftops, etc., in the city. And so that was kind of the mid to long-term goal, but it started by being a reward-based crowdfunding platform. So one of the first challenges was to actually align the vision of all of the partners. So the Lisbon municipality had probably one vision, but then the other partners had other visions. So one of the founders was a foundation, so it was more focused on cultural projects and social projects. The municipality was more focused on civic projects and entrepreneurial projects, and the bank was solely focused on social projects, actually. And so, the first challenge was to define a scope for the crowdfunding platform. The second challenge was, as mentioned by Audrius, is when you're a startup, it's difficult to have a crowd, right? So by starting a crowdfunding platform from scratch, it's difficult to attract the crowd. We know it by experience, and we've been here for 10 years now. And it takes time, patience, and resources to actually build the critical mass for your platform and attract all of the donors, but also attract all the projects that must be interesting to attract donations, right? So that's another difficulty. And so you need the resources, and that platform didn't really have the resources necessary for that. We built the technical part, but the partners failed to actually assign a project leader that would go, everywhere, to every event, every media, and try to promote the crowdfunding platform and try to attract this critical mass. So there were several limitations that prevented it from growing. I mean, PPL was already the scene for several years by then. And so we had kind of built the reputation and the credibility and the critical mass. And so, project owners, when deciding if they went to Boa Boa or to PPL, even if Boa Boa was significantly cheaper in terms of success fees, because it was subsidized by the partners, they still decided to go to PPL because it had a critical mass, it had the reputation, and it wasn't limited to a geographical area. So, all of that played a little bit against the Boa Boa platform. And so because it lacked this initial momentum, it also lacked the will to evolve to the other models, such as lending or equity, as I mentioned. There were, of course, legal challenges there as well. We didn't have the legal framework for those models yet. So it was, a very difficult challenge to tackle. It required us also a lot of resources from lawyers, which, as you know, are not cheap. And so, there was kind of a stagnation there that prevented it from evolving to those actually very interesting areas that we would like to have seen, which was green investing, startup investing, and all of those domains.
Okay, thank you, Johan, for telling us also the difficult side in setting up this kind of partnerships. You were talking about the legal aspect, also to set up different types of funding schemes. So I will go to Megan, that since January 2020, she's been leading the legal side of Seedrs investment team. So she followed the legal aspects of the Seedrs technical design related to the UK financial scheme Future Fund, established by the government to support the UK-based companies. So this scheme issues convertible loans between £125,000 to £5 million to innovative companies which are facing financial difficulties due to the coronavirus. So one of the fundamental of the future funds is that it requires that government's funds are matched with by private investors. So private investor can invest to eligible Seedrs businesses on the exact same terms set out in the convertible loans agreement prescribed by the government. So can you better explain us how you set up this partnership and what are the characteristics of these financial schemes? And I will add also that, so we were talking about the crowd that is needed for crowdfunding. What type of crowd do you address to? Thank you, Megan.
Thanks, Martina. Thanks for the introduction and for having me on to share our experience. I think you touched on it, but it's probably important to say at the outset that actually, the Future Fund is quite distinct from some of the other schemes that my fellow panelists have spoken about today, in that it was established for that very specific purpose in response to the coronavirus pandemic. And really in recognition of the fact that, the initial business lending and support schemes that the government announced in those initial weeks in lockdown didn't really work for the vast majority of high growth, loss-making businesses. The other point to mention, I suppose, is that it wasn't also a crowdfunding specific initiative, but we did have the benefit of participating in it as a private investor, which I can explain in a little more detail shortly. But overall, I mean, as a starting point, our experience has been an overwhelmingly positive one. And since being invited onto the panel, I've kind of tried to reflect on why I think it's been so successful. And I think you could probably distill it down to a couple of key factors. One is both in terms of the structure. So that's in kind of two senses. So the eligibility model, and then obviously also the actual legal structure of the investment itself. So as you mentioned, Martina, eligibility wise, it allowed eligible companies to secure a convertible loan ranging anywhere from 125,000 up to 5 million from the government, provided that they secured at least equal match funding from private investors. And that's a key point as to what they deemed private investment. Fortunately for us, the Treasury ignored initial suggestions in that interim period between announcing the launch of the scheme and actually opening it for applicants. There was questions over whether that would be limited to more traditional institutional VC investors. And thankfully for us, the government was quite pragmatic in allowing essentially any self-certified high net worth, sophisticated investor, or investment professionals, which is the category that we as Seedrs fell into, basically allowed all FCA authorized firms to act as an investor for the purposes of that private funding. And so it's an investor-led, criteria-based application. So once you satisfied a non-exhausted list of requirements, generally being that the company had to have raised 250,000 of equity investment, quite a key point there, because it did exclude, I suppose, a small proportion of companies who had yet to put a valuation on their company and had perhaps raised previously on a convertible basis that wouldn't qualify. But by and large, the vast majority of startups were eligible. They had to be the ultimate parent company in the group. They weren't able to be listed on any securities market, and they had to have been incorporated before I think it was the 31st of December, 2019. But assuming you satisfied all of those requirements, then the Future Fund didn't look to make any sort of subjective decision as to the merits of the given application, and really leaned on the private investor community's decision-making as to where to put its funds. So as a result, we've actually seen, developing a very sector agnostic portfolio now, much like ourselves, at Seedrs, we're not sector specific in the companies we raise for. So I think that side of things, the structure of it worked really well in terms of, reducing barriers for those early stage startups. The other real benefit of it was, I suppose, in the commercial terms. And I think they really got the balance right there, because it is ultimately quite an investor friendly agreement, which is understandable if you think about it just purely from a risk perspective for the government, but also, the logic there being that if you were a company that didn't need to take the funding, then you wouldn't be incentivized to apply. And we certainly saw that amongst our portfolio where, companies that were able to survive and had enough runway to see them through that initial period weren't pushed to take the Future Fund terms, because, it does accrue interest at a minimum of 8% annually, a minimum discount on a conversion event of 20%. It's repayable at a kind of 2 times original investment premium on certain events. So if it hits the maturity date and the company has failed to raise a qualifying round. But I suppose the benefit of the convertible loan note instrument is that it really removed the need for companies to place a valuation on themselves, at a time when, they're quite vulnerable in quite an unknown trading circumstances during the midst of the pandemic, and would otherwise potentially have been exposed to kind of aggressive valuations or preference structures that would have been placed on them by the VCs. So from our perspective, as I said, we benefited from the government taking quite a pragmatic approach. So we were considered an eligible investor, which meant that we actually didn't need, provided our seeders users had, were satisfied with the KYC and had kind of successfully onboarded onto our platform. Then there was no corresponding requirement that actually the crowd investors have to be high net worths or sophisticated. So it really opened out the funding to retail investors in that sense. And we invested in, I think our final total was 58 companies with an investment total of 58 million from ourselves, obviously then on a matched basis. So yeah, overall it's been really successful. It was kind of a quarter of all deals funded for us in the last 12 months have been through the Future Fund initiative. I think the other huge benefit was the speed at which they were able to put the scheme together, which, I mean, I think we're fortunate, as I'm sure most people are aware, we do have our current government is very supportive of our thriving startup ecosystem. So it's perhaps not surprising that they were able to launch the scheme as quickly as they did. But from our perspective as an investor, I think, really the infrastructure that they had in place, the literature that was produced, the transparency that was given from the outset in terms of having the convertible loan agreement publicly available, not simply for potential companies looking to raise, but any potential investors extending out to crowd investors could click onto the link on the British Business Bank's website and have a look at exactly what the prescribed loan terms. And, from our perspective, obviously, as you'll appreciate in crowdfunding, there is a need to be completely transparent about it, what the investment proposition is. So yeah, I think, it's been an incredibly positive experience for us.
Thank you, Megan. Thank you for sharing your experience. Yes, I guess that the transparency is a very, it's a point very important, not only for the platform, but also, and not only for the investors, but also for the public authority that can use like crowdfunding as an accountability tool. So I guess it is very interesting what you shared, and I guess it could be a model that can be also scaled up in other contexts.
Yeah.
So I will go back to Eleonora just for a quick second round. We have 20 minutes left. So considering your experiences and how this alternative financial scheme is conceived within a wider long-term strategy. So you started since 2016, now you have this experience, but for your municipality, what are your next steps? Also considering the horizon of the next programming period. So both in terms of public funds that you can use, and if you are thinking about different funding schemes, maybe not only reward, but also lending or equity.
Well, thank you, Martina. In the light of the positive result achieved so far, of course, we are happy to continue exploring the potential of crowdfunding and match funding for pursue our policy objective, of course, hopefully in the framework of the next programming period of cohesion policy. Before that, as a Department of Urban Economy and Employment, we will probably receive some additional resources under the REACT EU package, the Recovery Assistance for Cohesion and Territories of Europe, under the new instrument Next Generation EU. And if this is the case, our intention is to organize soon a new edition of crowdfunding, probably replicating the current edition. So maintaining a match funding scheme and a grant in the use of ESF or in general ESI fund grants. At the same time, other departments of the municipality of Milan have expressed their interest in make a more thematic use of crowdfunding. And all this considered, maybe an expert worth investigating also within this panel could be is if there is a kind of saturation threshold of civic crowdfunding. So how often is possible and sensible for a municipality like the municipality of Milan to replicate with the success rate experience? This could be a question to share with other participants.
Okay, thank you. So maybe if you like saturate your initiative with the work, you can switch on other types of funding mix.
Yes.
We will see. So thank you, Eleonora. I'll be back to Audrius. So your achievements are impressive, and you have 100% success rate, isn't it? So you can contribute to the hope of everybody here, so that the cooperation with crowdfunding mechanisms remains a mainstream funding option for the public authorities, which aim to give the SMEs the possibility to be financially sustained throughout their business life. So your initiative and your experience is very inspiring, but what are like technical suggestions that you can give us to drive in this direction of the mainstreaming of the crowdfunding schemes and mechanism?
It's not easy to develop a crowdfunding platform. It's not only that you need to create a crowd, but it's also technologically a difficult solution. So initial capital investment costs are pretty high, something around 1-2 million euros. So it's not easy to set up a crowdfunding platform. It's better, to create and facilitate these support mechanisms that would encourage platforms to appear, because it's always the chicken and the egg. If you are an entrepreneur and want to develop something, but you see that you need to invest into IT 1-2 million, then to attract crowd, probably that's going to take years and also a lot of capital. So it's pretty difficult business to start, and the results are not coming easy. So this openness from policymakers, invitation, and this open discussion about what the policymakers want to achieve would encourage probably entrepreneurs to start these small businesses of crowdfunding in different areas. I'm representing the lending area in this niche segment of the smallest SMEs that probably is the cornerstone of all economies. So for Finbi, it would be much easier to expand into other European countries if there would be similar products available in other countries as well. So from my point of view, is just that policymakers should just openly talk about their needs and show that they're eager to develop funds that would support this development of the businesses, especially right now when we have this pan-European regulation available, and we hear from the representatives of EEF that even the structures are available, how these support mechanisms need to be developed. So I just would encourage to sit down, invite people, have the open discussion, and you will be surprised by the benefits and the possibilities that you will open up.
Thank you, Audrius. So yes, I get the new perspective within the European regulation has to have to keep in mind also this kind of technical issues. I will go directly to Jon, because Audrius told us that the initial cost of the technical setup of a platform are quite high. And for example, for Boa, there was this initial these initial costs that were quite important, but as you told us in the case study, it's not so easy to build up a crowd since the beginning without having any other types of instruments to raise the crowd. So what are, according to your experience, the critical points, not only from the platform point of view, because you have this perspective, but also for the public authority to set up this this partnership, because in your case there was a consortium with different types of institutions. Maybe, I don't know if you learned something that you can share with us, allowing us to not do the same mistakes that not you, but the experience raised.
Yeah, sure. So I think, well, I think the main lesson is try to use the existing crowdfunding platforms, right? Because those guys know what they're doing. As Audrey was saying, it's a difficult task to set up a crowdfunding platform business, keep it running, and make it at least profitable, or at least be able to keep it alive for several years. It's a difficult business model, as you have seen. Many platforms are still not profitable, maybe because they're still growing, but it's a very difficult business, right? So building one from scratch, from players that are probably not the best suited for that kind of project is a huge task, is a huge challenge. So use the existing knowledge, the existing platforms. They know what they're doing, and rely on them to, as you said, find the right scope of projects that you want to support, find the right platform that allows you to find those projects and the crowd, and establish the criteria that you want to use to be able to support the policies that you want to apply on those different topics. And so that applies to different authorities, and that is something that we will of course try to explore more. Now that the regulation is out, it's also easier and as Bruno was explaining, for national authorities and managing authorities to explore these synergies. And so that's also a very, very good news. And it was very good news to hear that from the two first speakers, that it was possible in all means to do that. So that's great. So that's kind of the main lesson learned. The other ones are pretty much the kind of the common mistakes or common problems that you have when you have several huge partners. So every partner was a monster, and so they have a lot of positive factors, but they're also quite slow moving, right? So as Audrey was pointing out as well, a startup is more agile and can move to one direction or the other. These monsters, they do have the capacity to build big awareness, to source a big amount of projects, right? I mean, foundations, banks, they must receive tons of applications every day for funding any kind of projects. But from the person that was in contact with the platform to the people on the ground that were actually receiving the applications, maybe the information was not there, right? So how can you actually inform the people that on the ground that there is this possibility of channeling these projects to Boa Boa and possibly having some sort of match funding if they are able to attract the investment from the crowd? All of that is also quite difficult to accomplish, and so that's another lesson learned as well, because the potential was there, but it's difficult to get the pieces moving. And as you were mentioning in the beginning, and as Francesca was presenting in the previous presentation, the scope is very important. To then be able to focus on what you want to achieve and what the projects that you want to support. So those are kind of my main lessons learned, I think.
Thank you, Jan. Totally agree. Also about the external and the internal communication. So if you have a lot of partners that has to be engaged in this kind of activities, you need not only to train people that has to run the crowdfunding campaign, but you also have to train the people that has to that have to work with this kind of campaigner, like managers of the campaign. So the training is important both inside the consortium and outside. So this is a very important lesson, and it is also an experience that I face every day, talking with people that would like to start a crowdfunding campaign or would like to set up a match funding models from the public authority side. So I think we are not talking enough about crowdfunding. So thanks for your experience. Megan, back to you. We know that your experience is quite different from the others, but it is super interesting. So maybe you can give us more suggestions for other players that are thinking about setting up a partnership and a financial scheme that implies equity crowdfunding, equity-based crowdfunding. So this is my question. And also, for example, what are your future perspective about this experience? Because it was born for a specific purpose, but with a high long-run view. So maybe you were considering in developing this kind of experience, maybe considering other aspects like the social impact together with the return of investment and so on. So please.
Yeah, absolutely. I mean, we are looking constantly at various kind of co-investment opportunities, because I think it's a really exciting aspect of what we can facilitate on the platform. You know, as I said, overall, we found it really, really positive. So there were minimal blockers or barriers. So in terms of kind of constructive advice that I would have for the future fund around the scheme, I think the only real criticism that was kind of voiced during it is the fact that actually the nature of the instrument used, so the convertible loan agreement, and the debt-like elements of that agreement meant that it wasn't compatible with very popular and existing tax reliefs within the UK. So we have SEIS and EIS schemes, which work very well, and the vast majority of the campaigns that we run on the platform offer that to the retail investors. Unfortunately, you know, it was discussed. My understanding is, you know, they did seek to try and the government sought to kind of try and find some sort of solution to that. But I think, you know, presumably with the timing constraints, just weren't able to make it work. So the CLA and any investment under the CLA wouldn't have offered the crowd investors those tax reliefs that they'd usually benefit from. So that being said, I think with a view to looking forward, given the success, and I think if you look at the statistics around, you know, both Seedrs, obviously we're the top co-investor within the Future Fund scheme, and another crowdfunding platform coming behind us. But the fact that the top two co-investors in the scheme are crowdfunding platforms, I think should, I mean, give some sort of, you know, indication to the government that actually perhaps, I mean, it's very successful, but also perhaps looking to those kind of investments that are more appealing to crowd investors, such as kind of the tax incentives that go alongside would be food for thought for them. I think, you know, the scheme, when it was launched with an initial pot of 250 million, launched mid-May, and was expected to close end of September to applicants. You know, they really listened to the demand, and it was extended on 2 subsequent occasions. And again, as you've probably seen, the final tally is now over £1 billion in investment through the Future Fund. So there's definitely a need for these sort of supports in place. But as you say, I think, yeah, the most interesting factor for me will be not really a advice for a Future Fund, but more of an observation as to how is this going to play out longer term, because the vast majority of those convertible loan notes have yet to convert. You know, the Future Fund is yet to hold shares, but will ultimately, presumably in the vast majority, become a shareholder at some point. And I think probably a challenge for them is going to be, I'm sure it's what they're looking at right now, but how to manage that, you know, portfolio of upwards of 1,000 companies that they're going to hold shares in over the coming couple of years. So a challenge probably, but quite an interesting one as well. I'm keen to see how the government approaches that in terms of the kind of longer term equity stakes that it'll hold in these innovative companies.
Thank you. Thank you, Megan. Thank you also for sharing your results. And thank you, Eleonora, Audrios, and Johan for having demonstrated the potential and the flexibility at the same time of crowdfunding as an additional tool for public authorities. So it's a complementary tool in the allocation of the public resources. So going in depth of these 4 case studies has shown that the match funding mechanisms are very different from one another, and local authorities can be inspired from this wide portfolio of initiatives. So it was important to learn more about these experiences from the living voice of the protagonists and to simulate the scalability of those models. So also we saw that also the pandemic situation led to further development of some of the initiatives, as we have seen, and contributed to build up new ones, such as the Future Fund in the UK. So platforms and public authorities have been able to turn the crisis into an opportunity for the development of the countries and to meet the needs not only for businesses but also for civil society. So probably the period we have gone through and that we hope to leave behind soon has had the possibility to have positive externalities. So the fact that that widening the financial perspectives for the public authorities can find in crowdfunding an important ally for economic recovery. So thank you all. And I know that there are some questions, but I leave the word to Oliver and Francesca, who are managing the Q&A session. So thank you. Thank you again.
Thanks. Well, actually, thank you for the interesting insights that all of you have shared. We do indeed have a number of interesting questions. So I would actually start right away with the first one that is addressed at Bruno and Adam. There is a very specific question, which says that Article 45 of the ECSP regulation alludes to the possibility of introducing measures in the future that promote sustainable and innovative crowdfunding projects, as well as the use of EU funds. So the question is what your thoughts are on this possibility.
I don't know if Bruno wants to start or should I?
Adam, you go first.
Okay, thank you. Basically, at this stage, it hasn't turned into force with this 1 year. So it's it will be biting from November, and actually we have hopes that it will help a lot with establishing trust between platforms and public authorities, because at the end of the day, public authorities remain responsible for how the funds are used. So obviously they prefer working with organizations that they trust. So I think that the fact that crowdfunding platforms will have to meet certain standards is going to be, or this is our expectation, is going to be very helpful in establishing collaborations between public authorities and the crowdfunding platforms. As for how the regulation, I think that right now we're much more of in a monitoring mood. I cannot say anything about the other departments of the Commission that are more in charge of regulation of financial markets. But as for what we expect in terms of any future modification related to the use of public funds, is that again we want to see first how it will work out. And I think it's important that the possibility to keep the door open to further modification if they are needed. I think that's a very important thing. But at this stage, we do not plan to modify anything in the regulation to facilitate that. For the time being, we do not see the reason. But you know, this comes with a very big caveat that this is to some extent a theoretic exercise based on existing practices that we see are feasible and can be successful in the current legal framework. But you know, whether the upscaling is going to be as smooth as it's only a question of allocating more resources, I hope it will, and it will work out fine. But for right now, we want to see how it works in practice at a hopefully much larger scale than right now before going forward with any modification.
And from my side, I would like to add on top of what Adam said is probably very important to understand how we use it. So if it's only grants or is grants or is financial instruments, the two are covered by different set of rules. Of course, if you do financial instrument, as I explained during my intervention, you can combine financial instruments and grants. This is one of the opportunities which will be set in the new regulation. This is at the level of EU. Then, of course, in working as a financial instrument, and I gave the models in my presentation, assuming that the platform, the crowdfunding platform, is the manager of the financial instruments. It needs to be authorized by a law at national level. So there are countries where this is more advanced, and other countries where the legal environment in this respect is, I would say, lagging behind. So this is also important to consider. For the moment, one of the reasons why it was so difficult to use financial instruments and crowdfunding platform is that when you have to set up a financial instrument, you need to identify a body, an entity which is responsible, and there is a risk which is taken or an analysis which need to be carried out on the body who is implementing the financial instruments, and in this case the crowdfunding platform. If this is not possible to identify, then could potentially be a problem for the implementation of financial instruments. So again, we're going in the right direction, as I said. Much more attention into the next CPR. Nice to see that there is an evolution in the legal environment, but there is a lot of work at national level or a regional, local level if you want to set up a financial instrument linked or matched to a crowdfunding platform in order to be on the safe side. Adam was saying at some point in time, he said the auditors, we all do this because of the audit. So the first step I would say is speak to the auditors first. Of course, as Adam said, there is a need to educate, to change the mentality, to make sure that you speak the same language in order to, before starting or going in that direction, because the risk is to really set up a very heavy machine, and then for some reason the costs are not, or the cost incurred or the money spent might not consider eligible. So I would say there is a need to really don't do this in a hurry. Make it really take a lot of time in considering various aspects. I will stop here. Otherwise, I can speak for hours for financial instruments.
Oliver, I don't know if there's any questions that you
So, no, I mean, what I would be interested in is maybe if one of the other participants have a view on this. I mean, we're talking about very specific financial instruments right now here that are, using, EU funds. And we know that there's, slightly different possibilities, but do any of the platforms have also a view on this? I mean, when we look at the new regulation that labels crowdfunding, and we know Abdan and Bruno mentioned it, it comes into effect later this year, in some member states only in 22. And then there's a period where we need to implement. But from the discussions I heard, of course, that these match funds that you managed were highly interesting for you, helped you to scale, helped you to grow your business. So how urgent is it for you that this is being a topic that is being pushed forward? Because the Commission, and in this case, not Adam, but his colleagues at DG FISMA are going to review the implementation of ECSPR and will make adjustments and recommendations within the next 2 years. So here is an opening for the industry to, of course, say, this is something we want to develop. We want to see how we can play with this in order to maybe help Adam to get some help from DG FISMA to make this even clearer and more positive. So I think there's an interest for the industry to maybe evaluate this. Has anybody thought about this? Even though you're no longer in the EU, maybe? So not yet. Good. Then that's fine. There was a question about financial literacy, Audrius. You mentioned that you ran this campaign, but maybe also for all the other ones. So how is this done? How do you do it in the other projects? And when we talk about financial literacy, we know this is a big issue in the European Union. It's very bad. Statistically, half of us can't calculate interest rates. So this is something that the industry should actually work much more on. But this is a part of equality. How do we look at other questions of equality? Female investors, female founders. Is this an issue that you also tackle when you manage funds that come from the European Commission, like match funding, or from national authorities? Or do the local authorities look at this? Martina, is this an issue for you? There was a question around that.
If I may just comment on your previous question. So my view is that we won't have any crowdfunding in European Union without these funds. I mean, the crowdfunding will take 10, 15 years to develop on a natural wave, so to say, because it's a very long process. And without funds, we won't achieve any good results. So the policy, the regulator environment unified is amazing. It's really first step, but without support, we're gonna spend some time developing it. And probably other countries will step in and utilize this regulatory framework, but not from the inside of EU. Probably the outsiders will come and use this environment. On the literacy side, well, this is a subject that we always try to address or promote when we speak to the central bank and the INVEGA, that this is more of a side effect of the crowdfunding, because it really is because in the product itself, in its core, when you speak about loans, it's something that is simple and easy to grasp. So as I mentioned, people are starting educating the kids, opening an account with us, so that they could play around, understand, what is the interest, what is the installment, what is the annuity, what is the linear repayment schedule. So all these things come step by step, and this real life example, investing by small amounts, because we allow the minimal investment of €5. So even we can play around with the 20 euros, invest into five loan applications and see how it works with you. So the simplicity and low scale gives the opportunity people to try, and then once they try, they come back with the larger tickets, and probably then build on that basis about other financial products that are available in the market. But this is something that you have to start with. This is the basis where it's very simple and easy to grasp. On I don't recall how much in exact number we have female male percentages, but probably around 1/3 is female and 2/3 are male.
Thank you. Yes, good. I think is there anyone else who wants to comment on the issue around financial literacy, or
Oliver, I would, if you see me.
Yes,
I don't know.
you're welcome.
I'm back. Yeah. Thank you so much for the great discussion and all the thought pieces here to collect. Audrius, I would just wanted to, in a way, comment on the question Oliver just asked, but also ask Audrius, which I found very interesting, that you made the statement that we need this amount of money from the public funds in order to really grow the market in a potential way in the next 10 to 15 years. I found this quite significant and interesting because for me, for example, this whole public co-matching fund scheme is brilliant to also create more trust in the financial instruments and the crowdfunding platforms and to attract more companies and investors. But I think overall, if we all work together on the different arenas which are important, we can in general grow the market in the next 2 to 5 years massively. I have the impression this will happen eventually because more and more investors who have been benefiting from the improvements and the developments of the platforms will stick with the platforms. When I can just share from the last 10 years, in the beginning, of course, it was quite rough, right? I mean, the platforms had to learn, they had crazy stories. Like I also had the case where I had to look for the founder because he was burned out and nobody could find him, this kind of stories. And over time, we professionalized better due diligence, better cooperation, better understanding of all the different aspects of crowdfunding, which is so diverse, as you know. And there's a lot of knowledge to be built and understanding and narratives that people get it, financial literacy. I think this is very important. I think that we platforms learn much more how to communicate the advantages and to have best practices as we saw today. And therefore, what I would stress on, what I think was huge potential for Europe, which we should take very serious, is the potential for also bringing money into maybe not so active entrepreneurial or investing communities in Europe. There are great entrepreneurs in Eastern Europe, for example, but their ecosystem of crowdfunding is maybe not as developed also because they have some challenges in some cases with the regulator, or it's just not yet was the opportunity, the mindset. And therefore, I would just wanted to add that first, I believe that we quicker will gain more traction and more money we can bring into the ecosystem by attracting more investors, by co-matching, and also by being just a normal part of the full financial spectrum, because I'm surprised how often crowdfunding is still not mentioned in certain debates, even to 21, why this actually crowdfunding, it feels like, it's one component every company can profit from. And yes, I just wanted to add this and to the female thing, diversity, this is also a thing with diversity in general. I think the more we have standards, the more it's easier to invest cross-border. We will have more diversity. And with the female founders, I found it funny because the other day we asked, when we were in conversation with the Ministry of Economy in Germany, because we have some discussions there also with the implementation of the ECSP, there was actually the question asked how many female entrepreneurs are using crowdfunding, because this is one obviously reason or thing which they look at a lot. And Startnext, for example, the biggest reward-based crowdfunding platform, told me that they, for example, have 48% of not issuers, but project leads are female, which I found very interesting, because I think in equity lending, it's more like what's from the company side, more maybe 20 to 30% or something, as already was mentioned. And the investors as well is still increasing, but reward-based is really picking up and creating the literacy momentum, because it's an easy access to crowdfunding. And now we have to do our job to make also, that's my last point, do a great job in the industry to increase usability and to don't, let's say, kill the fun of crowdfunding by just bombarding, I think it's a German word, bombarding people with warning signals and just tell them all the time how complex and dangerous everything is. So yeah, I appreciate everything you guys are doing, and this I just want to comment on.
Just to make one point, Of course, there is a lot of regulation written into the new rules that needs to be applied, and platforms will have to deal with that and will not be super cheap for all of them. So we will see something. On the good side is, of course, that ECSP, as of this year, allows co-investing through AFM registered funds. So there is a possibility to co-invest even for public authorities, as long as they are able to use these types of investment funds. That doesn't apply to the ESIF structures that we talk about, but there is possibilities. The EIF is already doing it, and there's other institutions that also have the ability to invest money through crowdfunding as of this year. And if we look at the size of the market, yes, it's sometimes quite small, and yes, it should be much bigger, but Megan works for a platform that has transacted around 1.5 billion euros and makes on its own about 2% of the British venture capital market, then that is significant. And that is no longer a plaything of some stupid entrepreneurs, but there is the possibility, and this new law should make this. And I think, Adam, if we talk in 2 years, then this will be hopefully also for this type of topic. How do we use ESIF funds? Much more of a standard where you can see, which I understand is today difficult. We still had some questions, Francesca. I don't know if you have them.
I think that Megan had actually something that she wanted to share with regards to the previous questions.
Yeah, I was just going to circle back on the diversity point, because certainly for us, I think on both sides of it, and encouraging more female-founded businesses onto the platform and increasing actually the seeder investor base on the female side is certainly something we're focusing on. And recently had a raise with a company called Lick, who are a home decor and paint company, who broke the record and had the majority of Seeders investors were female. So that was a nice statistic for us recently. It was a big raise, a 15 million round, of which the crowd contributed 1 million towards, and within that, the majority of investors were female, which was a nice milestone for us.
Thank you. Absolutely. Since we have 3 more minutes before we close this Q&A session, just a broad, conclusive question to everyone. How could we make sure that, in your opinion, that we maintain crowdfunding principles of serving those sort of underprivileged or with limited access to market participants, and not transform crowdfunding into the next strong marketing tool? Or not only that, how do we make sure that we still keep the initial mission and vision that the tool had? Anyone can start. Johan, do you want to start?
Sure. Well, the main challenge, as I mentioned, is keeping the business afloat, right? So it's easy to say, well, let's go that way because it's more profitable, and let's leave this initial mission behind because it's not as profitable. So you need to I mean, there's room for everyone, and there's room for every focus, right? But if your focus is the undeserved, the unprotected, or the less privileged, then your mission has to stay there, and you probably need help with staying afloat, right? Because it's a very difficult business model, and of course we want to be social entrepreneurs, and we want to tackle a social problem while earning enough to keep operations running. But you probably need to think seriously about co-financing schemes, or as Adam and Rob and the 2 initial speakers were saying, getting financed by funds so that you can keep your mission going. That is also a possibility to take in mind, I think.
Thank you. Is there anyone else that wants to comment on this?
I think just from our experience, I mean, generally, I completely take the point around kind of the fear of straying into solely a marketing tool, and it's first and foremost always access to capital. I think for the vast majority of companies raising with us, certainly, when we do have later stage businesses on the platform, yes, it may be more centered around community engagement and marketing, but but more fundamentally, I mean, it's CEDAR's entire ethos is to try and democratize access to capital. So I do think that, yeah, the vast majority of the companies on our platform are there with a view to raise funds as opposed to use it as a marketing tool.
Thank you. Martina, I see that you have raised your hand.
Yes, just a quick reply. I guess that today we were not talking only about crowdfunding, but match funding. So opportunities to keep the public authorities on board in the crowdfunding dynamics. And it allows, from my point of view, to share missions, but also values. So I guess that in the definition of match funding and civic crowdfunding, we have this aspect that is you co-fund something that has an impact on your society, on your context, local context. So that's why the public authority is pushing this kind of match funding schemes, because the public authority needs to have an impact, a social impact, not only an economic one. So if we think in this match funding perspective that is considering the civic side and the social impact side of the crowdfunding, we can say that we are not talking only about market validation or something like that. So this is my hope also. So this is my point. Thank you.
Well, thank you, everyone. I take the opportunity to thank all the speakers so far. We're now closing this Q&A session that was extremely interested to hear from both the market operators and the public authorities at different levels. I'm now very happy to welcome on stage, on this virtual stage, MEP Rosa D'Amato from the Greens group in the European Parliament, and long-term supporter of our work. Rosa, welcome. Thank you for being here with us. I leave you the floor for the closing remarks. Up to you.
Thank you, Francesca. Good morning. In the first place, I would like to thank the European Crowdfunding Network for an invitation to this event, but also the previous speakers for providing such interesting insights, and all of the participants that showed an interest in finding out more about the relevance and potential of crowdfunding for public authorities. It's an honor to have the opportunity to deliver this speech and to witness the growth of innovative synergies, especially when thinking of the historical moment that we are called to face. The world and the European Union are called to rebuild after a global pandemic, whose social and economic consequences demand a strong, common and innovative response. As a member of the Greens EFA group in the European Parliament, I have to say I'm positively impressed by some of the ideas and best practices that were shared here today. Building a new paradigm of interaction between the public sector and the citizens, bridging the perceived gap between civil servants and local stakeholders, and working towards a more efficient and transparent system for resource allocation is indeed no longer a distant aspiration, but an ambitious objective that we are tasked with achieving. Exploring ways in which crowdfunding can be combined with public funds can be one of the many strategies that we all should work towards implementing. And I'm going to address this topic today in three main steps: the recent past, the present situation, and the future perspective that await us. The recent past. Starting from the recent past, the first time I came across the possibility of combining crowdfunding with public resources was in 2017. Already at that time, the crowdfunding sector showed great potential in Europe, with an impressive growth in terms of market volumes. Realistically, the increasing success of crowdfunding was a clear indication that not only more and more companies, NGOs, and other actors were approaching this mechanism to raise needed funds, but also that growing numbers of citizens were willing to trust these entities with their saving, either looking for ways to obtain financial returns on their investment or to support no-profit projects aimed at local development and social inclusions. In addition to this, learning about the appearance of public institutions, such as regional governments and municipalities, within the broader framework of crowdfunding initiatives was a further confirmation of the relevance of this instrument for economic development and social inclusions. I'm proud to say that since then, I have always believed that in the potential that such partnership could have on several different levels. In first place, for citizens, which through match funding can play an active role in the decision-making process for the allocation of funds. Secondly, for NGOs, small and medium enterprises, which see an innovative and more open mechanism to access needed funding. Thirdly, for public authorities, who can build a new way for interacting with the local stakeholders and increase transparency and accountability in the allocation of public resources. Finally, for the economic and social development of territories, leveraging on an increased level of available resources, as well as on an augmented sense of ownership and community in their jurisdiction. When the first edition of Eurocrowd's CrowdCamp on the topic of crowdfunding and structural funds took place in Bologna in 2018, it was clear that while the topic showed significant potential obstacles and bottlenecks related to the implementation of such partnership remained too burdensome for some managing authorities. Later that year, together with the European Crowdfunding Network, we organized a conference that took place at the European Parliament with the objective of raising awareness about this relevant topic and of engaging in a more structured discussion with the other European institutions. As a member of the European Parliament, it's our role and mandate to listen to citizens and the local administration's needs and requests, and to relay them where change can happen through decision-making procedures put in place by the founding treaties of the EU. It is with this in mind that together with other colleagues in the Parliament at the end of 2018, we have proposed a pilot project aimed at finding out how the European Union could better support these managing authorities that were willing to engage with crowdfunding. I'm very proud to say that this effort was not in vain, and I look forward to reading this study that the European Crowdfunding Network published today, as I am convinced that knowledge and expertise on this topic are, as the title of the report says, the only way of scaling up partnership and creating win-win situations. The present situations. Looking at our current situation, I believe that in the past few months, we have witnessed the potential of crowdfunding once again. In the aftermath of the COVID pandemic, crowdfunding has positioned itself as both an immediate and mid-term ally for vulnerable groups and charity projects, as well as for the beating heart of our economic tissue, micro, small, and medium enterprises. It is not surprising if you think that this instrument has first emerged as a partial response to a very different but still critical situation, the 2008-2012 financial crisis. In today's scenarios, we have seen how the flexibility and internet-based nature of crowdfunding have allowed hospitals to raise millions during the core months of the health crisis, such as the case of San Raffaele Hospital in Milan. Dear There have been many similar examples across the EU, which demonstrate how the crowdfunding wave is spreading heavily across Europe. At the same time, we have seen in the panel session how experience in the UK, in Lithuania, have also successfully managed to combine public resources from national governments with different types of crowdfunding. Both initiatives show how governments can partner with equity and lending crowdfunding platforms as to concretely provide an easier access to finance for those SMEs who have been hit the hardest in the past year and a half. Allowing small and medium companies to benefit from additional liquidity means paving the way towards a sustainable economic recovery while saving jobs and families in Europe from further struggle. Doing so by partnering with the crowdfunding operators means channeling private savings and public resources towards real economy operators, local shops, bookstores, theaters, but also emerging startups with the breakthrough innovations and family business with the sound traditions, all part of our European identity and social tissue. We have to learn from the best practices presented today and the additional ones that have been collected by Eurocrowd for their report. We have seen encouraging results coming from the best practices presented. In economic terms, crowdfunding resources have produced significant leverage effects on public resources, allowing more projects to receive funding or to scale up their ambitions in terms of activities. In social terms, we have not only seen significant participation from citizens who have economically contributed to specific projects, but also an increased awareness about future developments in local areas. We have seen flexibility in terms of combination, conditions, forms of finance, and business sectors in which partnership have been deployed. However, we must not forget that the impact that these initiatives produce is still limited to those public authorities that have managed to square the circle. It is of paramount importance that procedures and the requirements are mainstreamed as to enable replication of existing experience also in other areas and by different public authorities. The match funding blueprint included in Eurocrowd's report is a significant first step, but we must look at how we can develop off-the-shelf schemes for public authorities. And with this, I look at future perspective. I personally want to commend the FI Compass initiative and the EIB group for offering ESF managing authorities the opportunity to explore crowdfunding within the framework offered by the current cohesion policy. We must take stock of the findings of their work and look at the future period for the next 7 years. The new set of rules included in fund-specific regulation for ERDF and ESF, as well as the provisions included in the new CPR, can offer an opportunity in this sense. At the same time, the entry to enforce of harmonized European regulation for crowdfunding will clarify a number of elements in how crowdfunding platforms can operate in Europe and enable crowdfunding platforms to offer their services across the member states. Both regulatory developments represent a significant opportunity for managing authority, especially in a period in which the finalization of future operational plans is going. And as Mr. Bonino was mentioning in his keynote address, there is a growing interest in understanding how crowdfunding can be integrated in regional and national operational plans. I want to conclude with some food for thought for all us. 2 main challenges remain open in this sense. The first one refers to the lack of familiarity of public authorities with the crowdfunding mechanisms And for this, I want to thank the European Crowdfunding Network for the work it has been carried out since 2017, as well as for the organization of this event. It is fundamental to showcase good practice and disclose common mistakes that have been made in the past while developing partnership between public funds and crowdfunding resources, as to enhance the impact and reduce risk of these initiatives. The second obstacle refers once again to the lack of standardized methodology to approach match funding initiatives. I welcome to the work that colleagues in DG Regio and DG Fins are carrying out in this very moment, and together with the colleagues from the Greens EFA group in the European Parliament, but not only, I will continue to support efforts in this area. I thank you all for your work and participations. I confirm my commitment in the following through with match funding in the European Parliament, and I wish you all a nice rest of the day. Thank you.
Thank you very much, Ruta. This was a very powerful closing word. Thank you. I think there's not much we can add. I don't know if we would have questions for you or if you would have time to answer them. But I think this was a fantastic wrap-up. You combined everything that was said, and you stressed the importance of the potential that crowdfunding doesn't only have anymore, it has proven that it can deliver, but how we have to make sure now that it becomes a reality to, provide help there where it is needed and where other, say, financial players do not reach, or also other kind of grant organizations do not reach our society. So thank you very much. With this, I would like to close our event. I would like to thank all our speakers for being here today, for staying until the end. Even some of them were here right from the beginning, I think all of them. So thank you very much for you. Without you, this would not be able to deliver. Also the content that was developed, that was presented here today in the case studies, in the panel discussion, but also in the study that we are going to publish, and in the study that Adam from DG Regio has prepared and it's going to be published. These are, of course, all vital aspects in generating more knowledge and more facts for this market. And so I think this is where we need to lead from. And your view for the future, Rosa, was fantastic. And I congratulate the industry that there are people like you that support the future development of this market and commit to these, at least give a hand where you can to guide the process in the right way. So thank you very much to you. Thank you very much for everyone else. Thank you very much to all our attendees on Zoom, on YouTube, and everywhere else. Thank you very much.